So good. And we get a second season, right?
I know, which I'm really excited about. But Marco's gone. So
I know, I feel
really?
the same way.
Hey, I was like, the show is over.
Yet. No spoilers.
Sorry.
Oh, nice on this program. That wasn't good. Another attempt on the former president's life.
Former President Donald Trump is safe and unharmed. The Secret Service did exactly what they should have done. They provided exactly what the protection should have been.
Another shocking twist in this campaign in 2024. That conversation just around the corner from New York City. Good morning.
With Barclays, every change leads to a bold possibility. You have the vision, we have the insights, financial solutions, and global perspectives to help you make it real. Barclays Investment Bank, powering possible.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
This is an apology on behalf of the whole team at Bloomberg Surveillance as Lisa Brambett single-handedly ruins Shogun for everyone who hasn't watched it yet. Anything to say?
Including me.
I own it. Sorry. I'm like, come on. It just, I'm so excited.
You were late to it. I guess you just assumed everyone else had seen it.
Exactly. People, if you hadn't seen it already, you already got spoiled. So basically, this is, you're welcome.
Anne-Marie's sitting around the table thinking, I did not see it. I haven't watched it. And now I'm probably not going to.
Oh, no, I'm already getting hate mail. Sorry, guys.
Sure. Equity futures on the S&P look like this. We're just about unchanged. 5 days of gains on the S&P 500 through Friday, coming into Monday. In the bond market, yields settling down at about 364. In the FX market, the dollar at the weakest levels of 2024. Euro dollar 111.16. Dollar yen around 140. Under surveillance this morning, another attempt on the former president's life.
Former President Donald Trump is safe and unharmed. Following a protective incident shortly before 2 p.m. on Sunday, the U.S. Secret Service personnel opened fire on a gunman located near the property line, and this matter is under investigation. The Secret Service did exactly what they should have done. They provided exactly what the protection should have been, and their agent did a fantastic job.
So here's the latest this morning. The FBI investigating an assassination attempt on former President Donald Trump at his West Palm Beach golf course. Sunday's incident, the second one in 2 months, plunging the 2024 race into further chaos just weeks away from Election Day. Terry Haynes of Pangea Policy joins us now for more. Terry, it's another shocking twist in this campaign in 2024. What does it change, if anything at all?
I don't think it changes anything, John. And sadly, we have some precedent for this. Just about 2 months ago, was the attempt on Trump's life. And I said then, and turned out to be right, that I thought that Trump wasn't going to get any lasting benefit out of it. I think that's still true today, largely because Trump has a hard voting ceiling. In other words, everybody that says they're going to vote that's going to vote for Trump is already saying that they're going to vote for Trump. So I don't think this makes much difference.
Terry, when you look at what happened, though, in Pennsylvania, 2 months later, another attempted assassination attempt on the former president's life. And then you have the Palm Beach County Sheriff coming out and saying, well, maybe if there was a bigger protective perimeter, this individual wouldn't have been able to get in. Why is he not being secured as if he is the sitting president? Not saying he is, but being secured on someone who does have these attempts on his life.
Well, I'm not going to pretend to be amateur expert here, but I was involved in a lot of the discussions about the Capitol perimeter after 9/11, but that's another story. I'm still not going to be Mr. Expert here. But Congress needs to get to the bottom of this. And by getting to the bottom, I mean that the relevant people on the committees need to come back. They need to immediately get briefings. They immediately need to figure out what the Secret Service did and didn't do and how to correct it. And they need to do all that within the next week or so. Throwing more money at this problem is not going to help if you can't figure out what the best perimeter is going to be. And Congress has an oversight responsibility that so far it isn't taking up with the alacrity that it needs to.
Do you think this task force is doing a good job, given the fact that it was built on a bipartisan basis from the first assassination attempt?
I'm sure they're getting a lot of briefings. I'm sure they're gathering a lot of evidence. I do think, though, that you get 2 months past the event, you better know all the knowns and be ready to act on it, because we're in the middle of a presidential campaign, and we're in a situation where, heightened security, any incumbent President Biden, whoever the next president is going to need to respond to threats and need to anticipate those threats, apparently better than's been done in the 2 Trump attempts. And, I think the institutions of government here are not acting commensurately with the threat and the peril that's involved here for anybody, not just President Trump.
At this point, when you look going forward, how does this change the narrative, not necessarily for Donald Trump's campaign, but for Kamala Harris's campaign?
Well, I don't think it changes the narrative very much. I do think that at all, frankly, I do think that what ends up happening is that Harris continues to grind it out in the swing states and keep enthusiasm high. If there's any adjustment, I think they maybe adjust a little bit against personal attacks on the president or hyperbolic themes that may overstate his case. I'd bet on at least in a short term, a little subtle adjustment on that. And again, we saw that in July, but then within 2 or 3 weeks afterwards, which turned out to be the Republican convention, everything ramped up as if normal. Those adjustments may last a little bit longer this time.
Terry, given the fact that we have congressmen and women heading back to the Capitol today, what is your expectation in terms of them getting a CR through Congress and keeping the government open till the end of the year?
I'm sorry to say that I think what we'll see is the familiar scenario of brinksmanship, where a very few members see it as in their political advantage or in the party's political advantage to have some sort of performative shutdown. I don't think that lasts long. I don't think it's a big deal. So markets, I think, frankly, ignore it. But underneath, I want to point out to markets, too, that it emphasizes the unseriousness of what's going on in Washington. You have 2 political parties, one of which wants to continue to spend fiscally as it has done. The other political party thinks the idea of bravery is to cut 1% off of 30% of the discretionary funding. Neither is addressing the fiscal debt and deficit problem that markets are increasingly concerned about.
Terry Haynes of Pangea Policy with an important point to end things. Terry, thank you, sir. The important point here really is that whoever is in power, they have a very different view when they're not in power on whether we should be disciplined or not, with the purse strings down in Washington. Which
is the reason why Gary Cohn, who previously was the chief economic counsel director under Donald Trump, coming out and saying there's very little political appetite to increase the deficit. There's always political appetite to increase the deficit. This is the reason why people are watching when the bond market will push back, because until they do, it's going to be status quo, and that is what it is.
Well, to pick up on Terry's point, what they're fighting in Washington, D.C. is such a small sliver of the pie. This is where all the policy is done. But until they decide to go after what is going on with Social Security and Medicare, there's really no way to fix what's going on fiscally in Washington.
Bond yields this morning, at least, they're falling. They're not climbing. We're down 2 basis points on a 2-year at 3.55. On a 10-year yield, we're down about a single basis point. Your yield at the long end of the curve, 3.64 on 10s. On 30s, just short of 4%. Coming up on this programme, we'll catch up with Michael Harrigan of the Pax Group and formerly of the FBI as federal officials investigate a second attempt on Donald Trump's life. That conversation up next.
Powering financial solutions that transform industries. Powering seamless execution in evolving markets. We deliver our entire global bank to power new possibilities for you. Barclays Investment Bank. Powering possible.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
How much hate mail are you getting?
I'm getting a lot. I'm really sorry. I didn't mean to.
Is it that serious? That sounded so sincere.
Well, it was sincere because I recommend still watch it. Let's move on. I feel really bad.
And there's a second season coming too. Enjoy it. Every futures right now on the S&P 500. Negative by 0.06% on the S&P. We're just a little bit softer on the Nasdaq. We're down 0.4%. The outperformance, just relatively speaking, again, you see it on the small caps. The Russell up by 0.6%. This in from Ian Lincoln of BMO. Odds of 50 basis points are increasing, and they certainly are, going into Wednesday, looking for the first interest rate cut since the pandemic and looking potentially for a 50 basis point move. Switch out the board and get to the bond market. The two-year yield declining last week in the face of a hotter CPI, a hotter PPI, and not a bad jobless claims data point on Thursday, and yet still, bonds rallied.
Buy the rumor, maybe sell the news, or buy the rumor and then also buy the news, basically. There was this shift, and whether it was a series of articles that came out in the Wall Street Journal and the Financial Times, or whether it was a series of potential officials and former officials who came out in support of 50 basis points of a rate cut on Wednesday. Either way, this is a market almost fully pricing it. They're fully, say 40% or a 40 basis point rate cut is now baked in at a time where the data doesn't show weakness, which is basically nirvana for risk assets.
The bias in the bond market is just phenomenal. The bias to buy fixed income every time yields back up. The bias to ignore strength and embrace weakness every time we get data in America. We'll catch up with Manny Roman of Pimco in about 30 minutes' time on this subject. There is a massive bias to buy bonds in America over the last month.
Without a real question or without a real answer to what the destination actually is. And that really will be the key question on Wednesday. There is an issue of how much bonds can yield at a time where people are racing back to the bottom, even though a lot of people say we're still in an inflationary environment. It isn't necessarily 25 or 50 basis points on Wednesday. It is a question of that neutral rate that they're trying to get back to, and the fact we don't know what it is.
This move in yields unlocking some more dollar weakness. The US dollar started this morning at the weakest levels for the year so far. Dollar yen breaking down to levels we haven't seen since 2023. Dollar yen briefly south of 140. 140.07 on dollar yen. On euro dollar, 111.21. That's some euro strength and a ton of dollar weakness across G10 on the session this morning.
And this is front loading a lot of the rate cuts, in addition to maybe a soft landing type of scenario that allows trickling out to other currencies. It also comes with a potential Bank of Japan rate hike on Friday. There is this issue, though, of how far it can go, given the fact that there are a number of economic problems, whether we're talking China or whether we're talking about Europe.
And the outlook for tariffs and policy coming out of the United States. Under surveillance this morning, this story. Donald Trump's running mate, J.D. Vance, saying Trump's plan to hike tariffs on U.S. imports would help offset a growing list of tax cuts. Trump proposing to end taxes on tips, overtime, and Social Security benefits, along with a 10% across-the-board tariff that could spike up to 60% on goods from China.
I have a lot of questions about this, and I go back to what Lori Calvasina said, which is basically I left also the economic speech Trump gave in New York with a lot of questions on exactly his plans for tariffs and when it comes to his tax policies and whether or not the 15% corporate tax rate would benefit all U.S. companies or just those that have some sort of domestic component at home when it comes to manufacturing. But when it comes to tariffs, Trump said this in a Bloomberg Businessweek article. He said, man, I'm so confused why so many people are against tariffs. It is good for negotiation. Will this be a blanket, quickly put the walls up around the United States and ring fence the U.S.? Or will this be a negotiating tactic, which Scott Besson told us, maybe 2.5% on Chinese goods for 24 months until you get to that 60%?
Anne-Marie talking. Is there more clarity? I think not on your part, but with respect to policy, the answer is no. There is this issue of can you really bank on anything from either side to create an economic policy, an economic narrative? And the answer is, for a lot of analysts out there, not so much. There
are many reasons to introduce tariffs. We've talked about so many of them to protect domestic industry. If you want to use them to influence behaviour, this is the question I would be asking people on the campaign trail. What evidence is there that tariffs in America across successive administrations have actually influenced the behaviour of the Chinese, particularly at a time when China is failing to get in line with the Europeans, with the Americans on very key foreign policy issues? The tariffs stayed. Have we actually displayed any success whatsoever in influencing Chinese behaviour? I would suggest very little.
Especially because there have been some backdoor ways for them to avoid them, in particular having to do with the chip sector, in particular having to do with certain technologies in auto manufacturers. The question's going to get a lot more difficult when it's not just blanket tariffs on consumer goods, but when you're talking about some of these high security aspects that recently they're increasing some of their crackdown on.
Should we talk about one of those loopholes? I had no idea this even existed. White House officials poised to crack down on a loophole allowing low-cost goods to be imported from China tax-free. The US planning to begin taxing packages worth less than the previous limit of $800, a move directed at the rise of bargain shippers like Alibaba, Temu and Shein. I didn't know there was this loophole, but there you go.
To me, again, I was shocked that there was this loophole, and why does it exist? And I have to say, as much as some people, even in my own household, have gone to some of these and even gone to different knockoff brands to try to knock off some of the luxury players for cheaper goods from China, as much as they might lose out here, why is this in existence? Will this be difficult for them to get through at a time where it seems like a no-brainer? It just highlights, going back to the point we were making earlier, we say whether these tariffs have been effective, what are these crackdowns? There still are so many different apparatuses in place to make it easier for Chinese manufacturers selling into the U.S.
The reason why you guys don't know this exists is because you're not targeted by these cheap products, by Shein, especially in the fashion world, because you're not on TikTok, you're not on Instagram, and this is where they are starting to pick up these teens that want fast fashion at a really reasonable price.
That's why we're not shopping on Temu. No TikTok account. That would change.
Evidently. I'd be a lot hipper if I had a TikTok account, evidently.
Possibly. Lisa's still apologising, by the way, for those of you just tuning in for completely spoiling
Oh, my
Shogun.
God. Are we going to do this all morning? Just keep bringing it up again and again?
Ruined it for
Possibly.
me.
Okay.
Possibly. Let's turn to a much more important story. The FBI is investigating a second assassination attempt on Donald Trump at his golf club in West Palm Beach, Florida. Secret Service agents reportedly spotting a rifle barrel sticking out of a fence before opening fire and apprehending a 58-year-old suspect who is now still in custody. Joining us is Michael Harrigan of the Pax Group, who is also a retired FBI Farms Training Chief. Michael, welcome back to the programme. I'm happy to catch up with you, sir. Unhappy to be speaking about the same subject again just 2 months later. Michael, just tell us from your perspective why it's proving so difficult to secure and provide security for the former president.
Well, Mr. Trump, he moves around as he likes. I mean, obviously he's under Secret Service protection, but, he likes to get out there. He's known to love golf, outdoor venue. I think what you have here is you have to look at each threat and each attempt independently and look at what the background of these are. And both seem to be where there was some planning, and it was a point where he was vulnerable at that moment. So it's a tough one here to have two so close to each other, or should I say two on one candidate. That's unheard of. And this points to a very high threat level for the former president, and one that may call for rethinking his security and for Mr. Trump potentially to rethink how he goes about his daily life.
Well, Michael, that's what I wanted to ask. When you look at the near term right now and protecting the president, is it about changing his schedule or potentially changing some of his habits and what he likes to do? Or is it about changing the Secret Service?
It's a two-sided knife there. Both sides have to be assessed. But, when you come down to it, if you're not the number one thing for vulnerability, if you're not available to be attacked, that's your primary defensive measure, not to be where you could be attacked. Now, the Secret Service, again, they took a very hard look at them. Congress and American people have been asking questions about Secret Service since the Butler incident. On this situation, though, we don't know enough yet. It sounds, from what we can see, is that the Secret Service performed phenomenally in interdicting this threat before the man could take the shot or take an effective shot at the president. So Secret Service did well here, but I think you have to look at the overall structure of where he was, a public street. Anybody can stop a car and jump out anytime. This guy obviously crawled into the bushes where he was concealed. So, I think that both sides have to be looked at. But I think the primary thing here is for Mr. Trump to consider changes to his schedule now, however uncomfortable he might find that to be, and remove himself as a potential target of.
Well, this individual is 300 to 500 yards away from Trump while he was golfing. And the Palm Beach County Sheriff said yesterday that if Trump was the sitting president, we would have had this entire golf course surrounded. Should they have done that? Should they start expanding the perimeter?
Well, I think it's a duality here, again, is that, Secret Service has to obviously make some changes in how they might protect him if he's on a golf course. And I can guarantee you that from this point forward, he's not going to be in this position on the golf course. Secret Service is going to step up and do what's needed. But, you look at the balancing the public inconvenience of shutting down those major roads there in that area. To shut those down while he's playing golf is a huge inconvenience to the public. Obviously, in light of this situation, a reasonable cost to be paid, though, a reasonable cost. So, both sides have to be looked at. And, frankly, Mr. Trump may have to listen closer to his Secret Service advisors there and just make those changes, at least in the lead up to the election. It's only a couple months away. Obviously, he's got to get out there and go to his rallies and engage with the American public. That's what he enjoys doing. So that can't be interfered with. And they are taking very good measures there when he's in public at official events. But it's these private events like this where he's so-called off duty on his own time that now we see how vulnerable that can be. And it's a lesson to other presidential candidates out there for them to reassess how they go about their personal lives. It's a very frustrating time in this country to see this happening, and it's a critical time for us to maybe make some changes.
Given your prior work at the FBI, do you think this individual was watched? That given the fact that he, according to his Twitter account, which has now been shut down, has gone over to Ukraine and he claimed he was fighting on behalf of the Ukrainians. Was this individual, do you think, flagged previously by the FBI?
He could have been, but when you look at the breadth and depth of people that travel overseas or may have political views, I mean, it's a staggering amount of persons that could be potentially looked at by the FBI and maybe a file opened on them. Nothing substantive can be found because it's simply First Amendment speech. So then it's moved on, and they move on to other more relevant, more current threats. So just the fact he traveled overseas probably isn't a point of the Bureau looking at him. It would be more of what he's saying and what his footprint is on social media and what he said maybe to, in the public arena in other ways, whether he's a threat or not.
Michael, just to go back 2 months,
to Ukraine.
If I can jump in, sir, if you don't mind. Yes. Are you surprised how little we know about the motive behind the first assassination attempt only 2 months ago and the lack of detail between then and now? Are you surprised by how slow this process seems to be going?
To a point. I mean, I think the primary point here is to find out if both these individuals had connections to a foreign government, to a larger conspiracy. But unfortunately, what you see in some of these, what we call lone wolf actors here, that act on their own motivation, they may have minimal communication with others that could become a red flag and a chance to report and interdict these threats. So these individuals are out there. It's the same with the individual that shot at the Republican congressman on the Hill. He wasn't able to be interdicted beforehand because he was a lone wolf. He was on his own, decided to do this on his own. And same with these. Very difficult if they're not having conversations with others and talking about their plans. You lose that opportunity. Or if they're part of a conspiracy or a group that's under surveillance by the government, then the government has the opportunity to look at those communications and potentially stop these threats before they materialize.
Michael, we hope we don't have to have this conversation again. Michael, thank you, sir. Michael Harrigan of the Pax Group and formerly of the FBI after a second attempt on the former president's life in just 2 months. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. The yen is around its strongest level in over a year. The currency appreciating for a fifth consecutive day. It did briefly fall below 140 versus the dollar this morning, but is now back just about at 140. This morning, it's mostly the dollar side moving on nearly even odds for a 50 basis point cut priced into markets. The Fed's decision comes Wednesday. The BOJ's on Friday. Intel shares higher pre-market by over 1%. People familiar telling us that the chipmaker has officially qualified for as much as a $3.5 billion in a federal grant to make semiconductors for the Pentagon. That would add to a possible $19.5 billion in grants and loans awarded to Intel through the Chip and Sciences Act. As of the Friday close, the stock has fallen some 61% this year. Now, those $8 lattes may become more commonplace. The cost of premium Arabica beans this morning surged to the highest level in 13 years. Coffee futures as a whole have surged around 40% this year. There's been shortages of the cheaper Robusta beans, and that's boosted demand for the premium Arabica variety favored by coffee buffs. There's been concerns also about harsh weather in Brazil that's fueled the rally. Brazil currently grappling with its worst drought in decades. And that's your brief, John.
Danny, thank you. More from Danny in 30 minutes' time. Two views, two very different takes. Earlier on this morning, the former New York Fed President, Bill Dudley, making the case on Bloomberg Opinion the Fed should go big now. I think it will. Moments ago, Steve Englander of Standard Chartered, good reasons not to cut by 50 basis points. This one, I keep saying this, it is so finely balanced going into Wednesday.
And a real question of whether it matters ultimately, given the destination, how much they can telegraph that, given they will have a dot plot, they will have a statement of economic projections.
Up next on this program, a split decision.
We're looking for a 25 basis point rate cut, but for them to really signal they're going to do a sequence of cuts here. A 50 basis point cut, it suggests to us that they're more worried about downside risks to the economy.
That conversation around the corner from New York. You're watching Bloomberg TV.
Powering financial solutions that transform industries. Powering seamless execution in evolving markets. We deliver our entire global bank to power new possibilities for you. Barclays Investment Bank. Powering possible.
Just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
You're going to get this all week. This from Steve Englander of Standard Chartered. Good reasons not to cut by 50 basis points. The economic data has not made a compelling case for a 50 basis point cut at the upcoming meeting. Goes on to say cutting by 50 and being wrong would likely be worse than cutting by 25 and being wrong. What do you make of that argument?
It's arguably the exact opposite from what a lot of people are arguing. So you can pick the argument you like. You can make an argument either way. Problem for me is how much does it matter if you do understand the path, if you do understand how much they're going to cut this year? But then the second question is, if you think that 50 basis points of a cut is going to be the bigger mistake, does that mean that you think that inflation is still very much a risk, lurking beneath the surface, ready to rear its head once more?
You'd have to imagine that's what he means by being wrong. You'd have to imagine that might come up on the FOMC in the debate over the next 48 hours or so. Equity futures right now unchanged. Going into all of this on the S&P 500. In the bond market, down almost a basis point. The 10-year 364. And in the FX market, as we've said all morning, the dollar near the lows of 2024. Euro dollar 111.23. Under surveillance this morning, a split decision.
The Federal Reserve should be focused on moving policy rates back to neutral. And I think the question at this point is just how quickly they get there. We think they probably will revise down their own estimates for the rate path. In September, we're looking for a 25 basis point rate cut, but for them to really signal they're going to do a sequence of cuts here. A 50 basis point cut is if they end up doing it, it suggests to us that they're more worried about downside risks to the economy.
So here's the latest. Treasury's gaining with all eyes on Wednesday's Fed meeting. The debate on Wall Street now 25 versus 50. Krishna Mamani, preach. I hope they trot somebody out, set us up for a 50 and relieve us of our misery ahead of the meeting. Somehow I don't think it's likely. If we're going to have a hard landing, 50 won't stop it. It is too late for that. Krishna joins us now for more. Krishna, I just agree with you, sir. I think we all do. This is getting tedious. This from Steve Englander, and I want your thoughts on this, and welcome to the show. Cutting by 50 and being wrong would likely be worse than cutting by 25 and being wrong. Krishna, what do you make of that logic? Do you agree?
Well, so I think the point Steve is not articulating is the fact that the Fed is bound by its mistake in 2021. That is, in their minds, if they cut by 50 and you have reacceleration, that's a bigger challenge than if you have if they cut by 25 and things continue to slow down, because they believe they have a lot more space to cut rates over the next 12 to 18 months. However, if there's a reacceleration, it's on them altogether. So I think that's what the Fed is dealing with rather than the economic reality.
So what is the economic reality, Krishna? I mean, this has sort of been the big mystery. You said that ultimately is really what's going to be at stake in terms of determining the path of risk assets.
Yeah, so I think Dudley today articulated the economic reality quite well, which is, look, growth today is quite decent, 2.5% GDP now. Inflation has come down. Relative to inflation, short rates are too high. They can cut 50 basis points. Whether they will or not is really the issue. Is there enough room in the rate structure today for them to be aggressive? And absolutely. Is there weakness enough for them to kind of go whole hog? Absolutely not. And I think that's the challenge that they're dealing with.
What does whole hog mean, though, Krishna? I guess that's really the key question, given the fact that people are saying, some people are saying 50 basis points would move the needle on what market expectations were for the full year. Bill Dudley's argument is if you think that neutral is substantially lower than where we are now, why not get a rapid start to it? Otherwise, why aren't people going to ask, if you think neutral is 150 to 200 basis points below where we are now, why not move a little bit faster to get there?
Oh, absolutely. I think, again, they have the room to move faster. However, I think, as Dudley also argues, is the fact that they got a head fake in the early part of this year. And they don't want those head fakes because that would, doing a 50 ahead of an election, then end up with the head fake would probably be far worse for the credibility of the Fed than anything else. But as you have been articulating, that's really besides the point. I think they will articulate a very aggressive rate cutting path. And I think in the end, that probably matters a whole hell of a lot more than anything else. What we are dealing with is a situation where inflation is coming down, rates are high, economy is doing reasonably well. So there's a negativity vacuum, and we are trying to create some drama in the middle of all of this.
So, Krishna, let's get the market call. Let's think about how far bonds have moved. The 2-year topped out just north of 5% earlier on this year. I think back in spring, back in April, we've had a move of about 150 basis points lower at the front end since then. We've had a round trip in equities. Call it a growth scare, call it August, whatever you want to call August. We're back close to all-time highs on the S&P 500. Krishna, given those moves, as you start to think about the balance of risks into year-end, more upside risks or downside risks? What is the bigger risk for you?
So I think as far as bonds are concerned, at these levels, unless you think we are really going to have a recession or that probability goes up, I think the upside, that is lower yield upside in bonds is limited in my judgment. And it's not that we are probably going up meaningfully higher. It's just that we just sit around here for a long period of time. Having said that, I think if actually probability of recession increases, and we won't find out till probably middle of 2025 whether that is the reality or not, rates can move very, very substantially. I think the challenge with equities is the valuation. The environment is right, but environment is right along with the fact that we have already incorporated all of that information in our pricing. So upside is limited there as well, and a recession, the downside is quite substantial.
So what does that mean you're doing, Krishna?
I'm sitting tight from a risk perspective. and has been the case for a few months. Hasn't worked out too badly with the special emphasis on bonds. That is, if you had some spare money, investing in bonds makes more sense because it can run away from you. Equity markets are not going to run away from you.
Krishna, just quickly, invest where in bonds?
Invest in the short end of the market. I think you'll be, still cash is yielding pretty good, and at this pace, it'll yield pretty good for a reasonably long period of time. And if you don't, if your expectation is that we are going to have a soft landing, which is the case for me, the upside in buying longer bonds just doesn't exist anymore.
Okay, Krishna, thank you, sir. Appreciate your input. Good luck for the rest of the week. Try and get through it. Krishna Mamani of Lafayette College. I think we all feel the same. Peter Cheer feels the same too over at Academy. Good luck. I wish the Fed would come out at 10 a.m. Eastern time so we'd have less time to second-guess every position and view.
Basically, we're all sick of this conversation, and yet we're going to be having it for the next 48 hours. I do want to just note that what Krishna just said there was not what a lot of fund managers want to be hearing. Stay in money markets.
They've got things to sell.
I mean, they've got things to sell, and this isn't working for them.
If you find this tedious, wait until the next one. November 7th, that's going to be quite a meeting for the FOMC, 2 days after the general election.
Yeah, I don't know that that's going to be tedious, though, because they're going to have to take a look at who won the election and what the economic projections most likely are going to be at a time where that also is an uncertainty vacuum. I mean, a negativity vacuum. I love that idea. I hope we stay in a negativity vacuum for a while.
I hope we know who won the election 2 days after the election. That might be wishful thinking.
It might be wishful thinking because some of these states cannot start counting their mail-in ballots, notably Pennsylvania, until the election is over on November 5th, so it might take a few days.
Coming up on this programme, here's a lineup for you for the third hour of Bloomberg Surveillance. Manny Roman of Pimco, don't miss that. Greg Dacko of EY, Megan Robson of BNP Paribas and Bloomberg's Ira Jersey. It's a big week ahead. The third hour of Bloomberg Surveillance up next.
Powering financial solutions that transform industries. Powering seamless execution in evolving markets. We deliver our entire global bank to power new possibilities for you. Barclays Investment Bank. Powering possible.
Important role that it plays in everybody's life around the world, and then thinking something that's been built over 150 years, trillions and trillions of dollars of investments that's playing such a critical role in the economies around the world, how you transition out of that system. And I would say transition from a higher carbon emission system to a lower carbon emission system. We started out with a very narrow solution set focused on wind and solar and EVs, and assumed or aspired that that would address the total set of the issues, and it doesn't. We need to be more realistic around, to Patrick's point, there are a lot of solutions that are going to be required. We should stay focused on the problem statement, which is emissions, and reducing those emissions, and less focused on exactly how to achieve that, and let every company, every sector, all technologies compete for the most cost-efficient way to reduce those emissions, and we will make progress much faster, which will mean making today's system more emissions efficient, while we introduce new systems that have lower emissions. And then with time, you will transition and we'll make progress.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. The top names in tech are on Bloomberg.
A large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is a This is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Nobody covers technology like Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
There is a real risk the Fed is falling behind the curve here.
This Fed tends to move slow. They're watching with a rearview mirror.
The recent loosening in labor markets just suggests that there is some possibility for overshooting.
It's now about next year and the year thereafter where there's much more uncertainty.
It's not just that we don't know what the destination is. We don't know what the journey is.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now with an absolutely fantastic lineup for you. Equity futures on the S&P 500 just about unchanged, coming off the back of a 5-day winning streak and involving the most tedious debate of the year so far. It's become tedious, that's for sure. 25 or 50 at the Federal Reserve on Wednesday.
The reason why this is so tedious, let's examine the tedium that we have to discuss for the next 48 hours, is because we also don't know how much it will matter. Because ultimately, it is not just about 25 or 50. It is about how the market responds to it. It is about how it is telegraphed going forward. It is about the destination. It is about how Jay Powell dresses and how he sort of intonates when he gets to the press conference.
He used to do that with Draghi ties. Do you remember that? Yeah, and then it became Lagarde scarves and stuff like that. Just ludicrous stuff. Things are so finely balanced. There is a real belief on the street right now that a soft retail sales print or a firm one could tip the scales in one direction or the next. We've got retail sales tomorrow morning, and then we've got jobless claims on Thursday. Is that going to be what tips the balance here into Wednesday?
Well, it's because the market was pricing in 25 basis points after the jobs report, after inflation, and now all of a sudden, after an FT, a Wall Street Journal article, and we should note Bill Dudley's comments and an article in Bloomberg Opinion, now the market is pricing in 50 basis points, potentially the next shoe to drop where they can maybe change their position will be retail sales.
The former New York Fed president making a case in Bloomberg Opinion to go big, and he thinks they will. It's not just a case to go big. It's that he thinks they will go big on Wednesday afternoon.
He cited the articles in the Wall Street Journal and the Financial Times as a good sort of sense of how the debate was evolving, talking about how they could avoid getting criticized for not getting to the destination more quickly if they went by 50 basis points. If you take a step back, it goes to this question of what is the bigger risk here, inflation or employment? Pretty much everyone thinks that right now, at the moment, it is economic weakness or economic potential softening. On the flip side, Neil Richardson talking about what we see in housing prices, what we see with household wealth, what we see with sentiment. It's sort of tricky to know.
At the moment right now, there is a belief that it's more likely we get 50 than 25 based on market pricing. Coming up this hour, this is the lineup for you. Manny Roman of Pimco. As markets await this week's Fed decision, we'll catch up with Greg Dacko of EY on why he's expecting 75 basis points of cuts before year end. And we'll speak to Megan Robson of BNP Paribas on why she's bearish on credit going into the election. We begin with a big issue on Wall Street, 25 or 50. Bond yields falling going into this week's finely balanced central bank meeting. The Pimco team writing the post-pandemic inflation shock and rate hiking cycle produced a generational reset in bond yields. Central banks have largely succeeded in bringing down inflation to 2-point-something and are poised to begin cutting rates, creating a compelling multi-year outlook for global fixed income. I'm pleased to say that the boss over at Pimco, Manny Roman, joins us now for the next 30 minutes or so. Manny, it's good to see you, sir.
Good to see you.
Good
Thank you for having me.
Put us out of our misery, 25 or 50 tomorrow. What's it going to be?
Well, we're in the camp of 25, but, you know, I always say we have a crystal ball, and at the end of the day, we'll see what the market does. You know, it may very well be that it doesn't make that much of a difference, and our view is that there will be 3 cuts of 25, and at the end of the day, what matters is where we are at the end of the year.
Well, let's talk about the destination. This is a 3-part act on Wednesday, as you know. It's a decision, It's a set of forecasts and a news conference and a big conversation around this table for the last several months. What's the destination? What are they aiming for? What are they shooting for? Where does this land in the next 18 months?
Well, I think you can say that there's less inflation right now, and that in the absence of new data, the destination will be to have lower rates, and that the Fed will be very data dependent. And I think sometimes one underestimates how careful they are about new data and how they want to be able to change their opinion. And so if you kind of use this framework, you sort of say, let's do 25 and then let's see where we are, and then probably do 25 and 25. But I think the total sum of the rate cuts may matter more than how they do it.
Which is the reason why people are looking forward and saying maybe the neutral rate's 3.5%. And oh yeah, look at that. The 2-year yield right now is about 3.5%. Back in June, when you put out the outlook for Pimco, there was a feeling that intermediate bonds really had a fantastic investment proposition just simply because there was yield. Do they still, after the rally we've seen?
We still do think so. And listen, the exciting thing about being at Pimco right now is that fixed income is quite attractive. And you know, we are in a business of feast and famine, right? So when rates are very, very low, it's harder to be that excited about fixed income. And when you can build portfolio and get a yield of 6.5, you become very excited. And you know, we're very focused on treasury. But the reality is there is a lot of value in other part of the segment, asset-backed being one of them. And, you know, we're excited about what we see. And at the end of the day, the yield on the portfolio is a good predictor of the return that the investor will experience. And so what I think is exciting about fixed income right now is you can build a portfolio and get a return of 6.5% with a series of different instruments.
It used to be that bonds did better in bad times and worse in good times. Are we heading into a worse time where people go to bonds for safety, or is this on just an absolute basis, yields are higher?
My partner Dan Iverson, and I'm going to quote him because actually he has a very good line. Bonds may be the most attractive asset class. And I think that there's an absolute argument and then there's a relative argument. And I think the relative argument is to say you need to build a portfolio, you need equity, you need fixed income, you need some real estate, you need some private asset. And at the end of the day, fixed income is much more attractive than equity given the earning yield and given the valuation of the equity market. And I think that's one of the arguments for owning a larger part of fixed income. And I think when I travel the world, I think that people are underinvested in fixed income. And a lot of them are looking at putting more money into fixed income. And whether they do it tomorrow, whether they do it 2 weeks from now or 2 months from now, I don't know. But the reality is people were underinvested various parts of the fixed income market, and they're looking to readjust their allocation.
Have you got confidence we've re-established the inverse correlation between bonds and stocks?
I don't know what I don't know. And I think correlation fluctuates over time. I think that fixed income have a role in a portfolio construction, and I think they're there for a reason. But of course, credit spread in the high yield market are correlated to equity prices. So once again, I think one needs to be careful about how you frame the question and how you conclude.
Well, I guess I would be more specific by saying, have treasuries re-established an inverse correlation with equities? Because one of the risks that we've seen established over the last few years, particularly given the central focus was inflation, is that when bonds sold off, equities did too. Have we changed that story? Have we left that behind?
Hopefully we have. But I think remember that we also saw with the pandemic really an unprecedented program of money creation, which sort of threw everything and our economic textbook in terms of how we thought about the correlation. And so I'm careful about what I say because the data are just so skewed in terms of what we saw. And I think, you know, you can make the argument, for example, that part of the reason why the US economy has done so much better than any other places is that the package in terms of the pandemic has been so much bigger than in other country. And at the end of the day, all you can do is cross-sectional analysis and try to compare different countries, but there's so many other variables that comes into the picture that you don't want to understate the enormous creation of great company in the US versus Europe, for example. And so I think we try to always be careful about making definitive conclusion when it comes to correlation and when it comes to cross-sectional comparison between different countries.
Another way to frame this question is when you travel the world and you talk to international clients who are underinvested in fixed income in the United States, how many of them turn to you and say, what about the U.S. deficit?
Well, my friend and partner, Richard Clarida, used this very American expression and says the U.S. is, let me try to make sure I get that right.
Carry on.
The cleanest dirty shirt. And, you know, we have debated quite a bit at a forum about deficit and you know, deficit do matter. And they do matter. And at some point in time, there's a tipping point. But we're not there. And the reality is it's a huge competitive advantage to be the reserve currency. People need to own dollars. And the reality is we don't think there's a crisis coming and that the level can, and the US can have certainly a high level of debt versus historical precedent and be able to function just fine.
When will the U.S. get there? And do you see either party have any impetus to try to rein in spending?
So to quote my partner, once again, Libby Cantrell, who comes often here on the show, no, we see no impetus to try to deal with the budget deficit. The only real example we have is the United Kingdom. And I think that the United Kingdom was actually quite interesting because you saw a situation where the bond market reacted so violently to the Liz Truss proposal that all of a sudden they had to change and had to change really, really quickly. And I think that this example of what happened in a very developed country and how the Bank of England reacted and reacted really quickly with the LDI situation and the pressure in the gilt market and in the pension market will be a textbook example of why markets react quite strongly when something outrageous comes.
Well, we have a Bloomberg survey to that point that says Kamala Harris, a victory for her in the White House would be better for treasuries and worse for stocks, vice versa for the former president. Would you agree with that scenario analysis?
I think there's so many unknown. You know, it depends on what happened in the House. It depends on what the winner can do in terms of program, how this is all going to pan out. I would be very careful about making any prognosis on this matter. I think, you know, when we think about the world, you know, I realize politics is really important.
Yeah.
But at the end of the day, that's not how we invest. We invest because we find value and we find opportunity and we try to buy cheap and we try to manage portfolio and think about risk carefully and ride different cycle and deal with many other factors than politics. And you know, there's a few exceptions. If you talk to my partner Pramal Dhawan in emerging market, all of a sudden, in emerging markets, sometimes politics do really matter because they are very big changes and very big different outcomes.
The struggle, Manny, as you know, is that some DMs have traded like EMs over the last few years. And you mentioned the UK, so I won't put words in your mouth. I do want your views. Well, it does feel like a self-imposed debt break in the United Kingdom. And I'm wondering whether, from your perspective, for you and the team, that actually makes UK government debt a little bit more attractive here.
We think it's very attractive. We like the UK, we like Australia. We think that the UK fits very well in the portfolio and they will need to cut rates significantly. And so when you think of a global outlook, the UK looks good for a fixed income investor.
Relative to the United States, say, in terms of duration risk?
Relative to other countries in Europe, certainly compared to European bonds. We also like the US. So, you know, if I want to kind of sum up things, you know, we like the US, we like the UK, we like Australia.
OK. Manny, you're going to stick with us, I'm pleased to say. We're going to have more to say on both the markets and on the industry as well. Manny Roman of Pimco sticking with us for the next 20 minutes or so. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. Donald Trump is reportedly safe and well after a second apparent assassination attempt. Authorities took a 58-year-old man into custody at Trump's golf course in West Palm Beach, Florida. Secret Service agents had spotted an AK-style rifle barrel sticking out of a fence about 400 yards away from the president, who was playing golf at the time. The FT reporting this morning that Citi is stripping its chief operating officer, Arnand Selva, of his responsibility for a key piece of its compliance work. Citing 4 people familiar, the paper said the change follows a $136 million fine by regulators this summer for reporting failures. Selva's responsibility for data compliance will instead be passed to the bank's chief technology officer. And a new report finds that New York City's MTA transit system needs $115 billion of repairs and upgrades. The Citizens Budget Commission says the city should focus on repairing its current infrastructure rather than diving into expansion projects. The estimate, though, far exceeds available funding. The MTA must release its 2025 to 29 budget by October 1st. And that's your brief. John.
Danny, thank you. More from Danny in 30 minutes' time. Up next on the programme, we'll get you some morning calls, and later, Greg Dacko of EY weighing in on the 25 or 50 debate. Greg's coming up a little bit later in the programme. More from Manny Roman of Pimco. Up next on the show from New York, this is Bloomberg.
With Barclays, every change leads to a bold possibility. You have the vision, we have the insights, financial solutions, and global perspectives to help you make it real. Barclays Investment Bank, powering possible.
Or other authorities.
Could face bigger challenges next.
It was going to keep playing World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
The opening bout just around the corner. Equity futures turning a little bit lower on the S&P 500, negative by 0.1%, coming off the back of a 5-day winning streak on the S&P and the best week so far of the year. Time now for some morning calls. First up, Wells Fargo downgrading Colgate to underweight, highlighting the stock's rich valuation and slowing sales growth. That stock is down 1.6%. Your second call from B of A, initiating coverage of Yelp with an underperform rating, expecting competitive pressure to weigh on the growth outlook. And finally, Evercore cutting its price target on Alphabet to 200, down from 225. The analyst seeing limited upside due to lingering antitrust concerns. That name is just about unchanged in early trading. Back with us around the table, I'm pleased to say, still with us is Manny Roman of Pimco. Manny, I want to come back to the bond market and just talk about a dynamic that started to really take hold over the last month or so. The 2-year, 10-year segment of the yield curve, things just starting to normalise. Bit of steepness, almost back to double figures this morning. As we get that curve normalisation, can you walk me through how much things change in fixed income, whether you're starting to see that cash deployed a little bit more?
Well, I think there's that. And of course, people kind of look at the cash they have on the sideline, and there's about $10 trillion of money in cash where they will think to reinvest it, either by extending duration or by going longer or by taking a bit more credit risk. So there is a wall of money out there. And I keep on saying this. And of course, some of it is cash corporate and will remain cash corporate. But I think people have been very much on the sideline rolling short-term treasury bill. And this money will get redeployed. And how fast and how remains to be seen. The other thing which I think you may find interesting is there are a lot of opportunity in relative value in the fixed income market, and in particular, think of Japan. You know, nothing happened in Japan for 15 years, and then all of a sudden, we now have positive rates in Japan. And there's a lot of arbitrage to be done. It's across the curve, it's with swap, it's with different instrument, and all of a sudden they are sources of alpha, as we tend to call them, where basically they didn't exist 2 years ago, which have come back to the market in spade. How long it lasts, we'll find out, but it should be a very exciting opportunity in terms of the whole market, in terms of delivering better performance.
How difficult is it to pry that cash out of people's cold hands, given the fact that people really do like what they're getting? And, oh, by the way, there are 15 other fund managers out there also trying to get them to pry that cash out of their hands.
Well, I will tell you, competition is good for everybody. And at the end of the day, there's two things. There is, when the Fed cuts rate, eventually the short end of the curve becomes less attractive, and I think you'll see cash moving. And from a competitive standpoint, we want to do the best possible job in terms of being a fiduciary and doing a good job in terms of performance and being there for our clients. And we compete every single day. And hopefully we win more than we lose. But all we can do is try our best, and we're trying very hard.
Where's the edge? Where's the sort of growth concentrated in, or is trying to be concentrated with respect to Pimco in the, say, 5 years ahead?
Well, Asia has been quite exciting lately, and there's a lot of things happening in Asia. And you can sort of think of our business as being linked to GDP in terms of the saving rates, and people, when they save more, invest more. And so Asia has been quite exciting. And the US is an absolutely wonderful place. I mean, it's a big market, and there's a lot to be done. We have a very good Canadian business. We have a very good Latin American business. There's a lot of good things happening. But the one variable we don't control is, of course, the macroeconomic situation. And so if you have a real reversal and you have, for example, a recession, and let me just say it's not our scenario, but if you have a real recession, people become more risk averse and take some money away. And at the end of the day, we're here for the next 20 years, not for the next 20 minutes. And so, we have very liquid portfolio. People can take the money whenever they feel like and reinvest and so on. And we understand that people need money for all sorts of reasons.
There are a number of behemoth asset managers. Pimco oversees $1.8 trillion. How much bigger could you see it getting?
It's all about performance. And I always say the great thing about not being public and not having to give quarterly earnings is you focus on what matters. The circle of truth is if you perform, they will come.
You said this last time we spoke. Don't measure our success by assets. We measure our success by the returns we provide. Does it disappoint you? Is it slightly upsetting that people do measure your success by assets? Because they've been pretty stable now for the last decade. BlackRock over the same period has multiplied. Is that disappointing to you that people judge you by that?
I think we have a very different business model. And, we were talking about Walmart. We don't want to be Walmart. Walmart is a fantastic company, but we have an opportunity set where we very carefully think about capacity and how much money we can put to work and what the right target return are for investors. And I think that, by definition, means that we won't be the largest asset manager, and so be it.
When it comes to asset management, private markets comes up all the time, and everyone's trying to make their own push. Where does Pimco fit into that big push at the moment into private markets?
So we try to focus on what we know how to do. And what we know how to do is fixed income, and so that includes, as a matter of fact, everything which has to do with private market and fixed income, and it also involves real estate. And there's a big real estate cycle that should be exciting. There will be pieces to pick, and there will be cheap investment, both in debt and in equity. And in the private credit market, there's quite a unique opportunity in asset-backed lending. That's where my friend Dan Iverson grew up in. We have been doing this for 20 years. And the one thing which has changed, so to speak, is the banks need to free up capital. And so they need to sell large portfolio of many different assets and do it fairly quickly. That's an opportunity for us. And so if they are good entry point and good asset to pick, we should be able to do quite well.
What types of assets? Are you talking about commercial, or are you going to be owning big residential
mortgage,
swaths?
All bonds
rental
that
homes?
Banks. Let me just focus first on fixed income. I think in fixed income there's a lot to buy, and there's a lot to buy because the banks need to delever, and so the banks, you can think about what they have on their balance sheet. They have loans that they've given to company, and they want to get rid of it, and so they sell it to us, and That, I think, is fairly straightforward. In real estate, you have a real estate cycle, and there will be different things you can do. Some will need pref equity, some will need debt, some will need to buy equity, and we just need to make sure that it's cheap enough and that we think carefully about what happens and make sure we have an expected return which compensates for the risk. And it needs to be high because there's a lot of risk in commercial real estate, for example. But we had a pretty fast cycle, and hopefully we're going to be on the right side of the trade coming out of it.
We've only got 60 seconds left with you, so the hardest question of the morning. What's more likely, Arsenal winning the title or the Federal Reserve engineering a soft landing?
Arsenal winning the title.
Arsenal winning the title?
Yes.
Should I read into anything about your real views on the economy then, based on that, or you just think Arsenal's that good?
No. You should. You should think about Arsenal. No, I think. Look. I think people are very. Sometimes criticize the Fed. I think they do a really, really good job with a very difficult hand to play, and you know they don't know what they don't know. At the end of the day, and I think it has been a tremendously complicated market to navigate for everybody over the past 4 years. None of us ever thought we would see a pandemic, and you know, from an investment standpoint and from a regulatory standpoint and from the Fed standpoint, I think we had to learn a new playbook.
It's been humbling for us all. Manny, it's good to see you, and great win over the weekend. Thank you, sir. Appreciate it. Manny Roman there of Pimco. Coming up on this programme, Greg Dacko of EY and Megan Robson of BNP Paribas. The week continues to build. The anticipation continues to grow. 25 or 50 on Wednesday. A three-part act. A decision. A set of forecasts from the Federal Reserve and a news conference with Chairman Powell. Going into all of that, a 5-day winning streak on the S&P 500. 1 hour away from the opening bell, with equity futures down just 0.1%. And in the bond market, yields lower by 2 basis points, with the dollar sitting near the lows of the year so far. Euro dollar, 111.27 from New York. This is Bloomberg.
With Barclays, every change leads to a bold possibility. You have the vision, we have the insights, financial solutions, and global perspectives to help you make it real. Barclays Investment Bank. Powering possible.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
It's Monday, 8:30 Eastern Time, and I know you're already absolutely sick to death of this, but it's going to continue for the next 48 hours. This from Andrew Honhorst of Citi, 25 or 50. Don't turn the volume down, stick with me. This is what he's got to say. Our base case is a 25 basis point cut on Wednesday, but articles in the Wall Street Journal and FT last week left the potential of a larger size cut on the table. This will come down to committee dynamics, arguing for the next 2 days, and Tuesday's retail sales report. In either case, we expect a dovish FOMC with the median dot for this year implying 100 basis points of cuts, which would mean at least one 50 basis point cut at one of the last or one of the next 3 meetings going into year end. Going into all of that and going into the opening bell, which is about 60 minutes away, your cash open is just around the corner, and equity futures are down by 0.1% on the S&P. On the Nasdaq, we're down 0.5%. On the Russell, some outperformance. The small caps up by 0.4, coming off the back of the biggest weekly gain on the S&P 500 so far. Let's get some morning movers with Danny Berger. Hey, Danny.
Hey, John. A little bit of sell-side action this morning. Colgate palm oil down some 1.5%. This coming from Chris Carey over at Wells Fargo, downgrading from neutral to underweight, saying that it's not weakness, it's just normalization, that the epic run for Colgate is over. Also doesn't help that there's been this huge defensive equity run that has left the stock more expensive than their peers. Meanwhile, over at Intel, it is a gain in the pre-market session this morning, up 1.5%. Bloomberg reporting on Friday that they've won a $3.5 billion defensive contract for the Pentagon to make chips for them. There's been some criticism from their peers saying that the White House, that the Pentagon is just too reliant on this one chip company that has had some issues. That's down 60% year to date. Nevertheless, shares up 1.4%. Wrapping things up with Apple, shares down 2.5%. Strategist Min-Chin Kuo saying that they've done pre-market checks, they've looked at supply chains, and the orders for iPhone 16 are weaker than anticipated. John, 13% down year over year versus the iPhone 15. It's because of competition in China, and that Apple Intelligence, that AI feature, you're not going to be able to get it with this iPhone 16 latest release.
I'm waiting for the AI goodies, and then maybe, we do the hardware upgrade, and then you get the AI goodies, and it might make sense. Until then, I'm not sure it makes sense for me. I don't know if it makes sense for you. Danny, thank you. Your week ahead looks like this. Federal Reserve decision Wednesday, sandwiched between some economic data. On Tuesday, retail sales. On Thursday, we'll get jobless claims. Out just moments ago, Empire Manufacturing. Mike McKee around the table with us for more. Mike, what have you got?
Well, this isn't a major indicator, but it is interesting because going into the Fed meeting, we're seeing some expansion in the New York region. The general business conditions indicator rises to 11.5 from negative 4.7, so a fairly large move. New orders, shipments, inventories all up. The only thing that's really down is prices paid, and the number of employees improves, but it's still negative. So there is some signs that the economy is hanging in. Whether you put a lot of weight on the Empire number or not, it is maybe a small thumbnail on the scale.
To be clear, we had another thumbnail on the scale last week. Jobless claims were pretty decent. Jobless claims have been OK for the last 4 weeks. There's still this real sense that we're so finely balanced that all it might take is a soft retail sales print to all but confirm they're going 50 on Wednesday. What do you make of how people are talking about this decision going into Wednesday?
I think it's the first time that we go into a meeting in years without knowing what they're going to do. And so it's a finally balanced decision. So people are trying to guess one way or another, and you're basically bringing your own biases to it. Whether you think that the Fed should be doing 50 or 25 is what you're going to end up predicting at this point, because you don't really know. And to the extent there were leaks to newspapers last week, they didn't give you any kind of definitive answer. They just raised the question, the possibility that the Fed could do 50. So it gives the market something to look at if they want to do that and not freak out if they were betting 100% on 25.
Mike, what's the risk of this ambiguous approach, basically, as we head into the decision?
Well, it's probably more of a risk that they've put out the possibility of 50 if they did 25, because then the markets are going to react to that. But you've got the other side of if they do 50, then what do they know that we don't know? Ian Lingen from BMO put it well this morning. He said basically the markets are going to price the next 12 months based off of what we get on Wednesday. And if you do 50, then they're going to start looking at 50s going forward at a more rapid rate down to whatever they think neutral is going to be, which was 2.7 last time.
Lots of buzz around the Bill Dudley piece. Former New York Fed president and Bloomberg opinion this morning. The Fed should go big now. I think it will. I know you've read the piece. I'd love your thoughts on it. What do you make of it?
Well, he makes a very good argument for his side. Greg Ip in the Wall Street Journal yesterday, published last night, makes the same case that the Fed is maybe behind the curve and it's better to do 50 now and get started on that so that you don't fall too far behind. The problem there is the people who make the case for 25 bring up that the way the market's going to react to this.
Yep.
And so you've got some real countervailing views here, and it would be great to be a fly on the wall in the meeting. Normally, they go into the meeting with a decision pretty much made because Jay Powell talks to them all on Friday, and they all tell him where they're going to be, and he can persuade people. But in this case, you get the impression that he's going to let people talk.
They always say every meeting's a live meeting. For the first time in a long time, as Mike said, this is the first time in a long time it actually feels like a live meeting. Mike's going to stick with us. Mike's in Lisa's chair. If you're wondering where Lisa is, she's run off for jury duty. She's hoping she's going to be back tomorrow. We hope she's all back tomorrow and not lost for several weeks. Joining us now is Greg Dakov, EY. Greg, good morning to you, sir.
Good morning.
I said as you walked into the studio, this is getting so tedious for so many people because we all know that not all 25s are created equally. Not all 50s are either. And it's only one piece of the overall puzzle for the Federal Reserve on Wednesday. What are you and the team looking for?
Well, we're still looking for 25. We're not going to change our call at the last minute. I think there's a lot of movement in terms of market pricing that has come off of these two articles, the Wall Street Journal and Financial Times last week. But I think the uncertainty is still quite high. And as Mike was saying, it's all about how Fed Chair Powell manages to convince or not the rest of the policymakers. I think there's a strong split within the FOMC as to Fed Chair Powell, perhaps Governor Waller, open to front-loading rate cuts, to catching up a little bit because they do realize that the economy is weaker than they had been anticipating. But most other policymakers still remain extremely data point dependent. And the data, as of the last few days, has not been sufficiently weak to convince them of a 50 basis point rate cut.
Let's start with the chairman and then get to the rest of the committee. I want to share two quotes with you. One was from the start of summer. The other quote was towards the end of summer, and both are from Chairman Powell. In Sintra, Portugal, Chairman Powell said, because the US economy is strong and the labour market is strong, we have the ability to take our time and get this right. Then at the back end of August, the end of summer, he said, we do not seek or welcome further cooling in labour market conditions. Given the data we've had since Jackson Hole, which chairman shows up to this FOMC meeting?
I think it's still the latter one, the one from Jackson Hole, saying that he does not seek or welcome any further weakening in the labor market. We have seen an environment where I think the main issue from the Fed side is the communication issue. We have seen a lack of communication as to a couple of things. One, the destination of travel, where the neutral Fed funds rate is, and two, how to get there, the destination. Those are the more important factors than whether the Fed goes 25 or 50 basis points. As Mike was saying, there is asymmetry around the fact that the Fed goes larger or smaller in terms of rate cuts. But what really matters in terms of how monetary policy is going to affect the economy is how rapidly we get to any form of neutral monetary policy stance.
When it comes to that communication, are you expecting clarity?
Perhaps a little bit more clarity, perhaps a little bit more transparency in terms of the fact that the timing and the pace of rate cuts will depend on the totality of data. That may be a shift in the monetary policy statement, arguing for a framework that is a little bit more forward-looking. I think that's what we've been lacking all along. Data dependency was the main theme. This is a good slip of words, but data point dependency has become the norm. It was all right when inflation was rising extremely rapidly and you wanted to make sure you were really adopting the appropriate monetary policy stance. It's no longer optimal. You want to look ahead to where inflation is going to be in a year's time where the labor market's going to be and where income is going to be. Because I've argued in the past that we're not paying sufficient attention to income trends. Income trends are much weaker than GDP data and consumer spending data, and income, in the end, is the main pillar to economic activity.
Well, if you think that, then should they go 50?
I think they should go 50, yes. I think they should catch up. I've been arguing for a while now that they should have started easing back earlier this summer. Why? Because you want to go gradually. When you're uncertain, you're rather better placed to essentially ease monetary policy gradually and avoid these hesitations, or what seems like hesitation, in going larger rate cuts. So I think, yes, they should have gone earlier, and that may be one of the justification that Powell uses if the Fed does decide to go 50 basis points, that they did not ease in July. It may have been optimal to do so. Therefore, we're catching up. And that's where the whole dot plot discussion is going to come into play. How many rate cuts are expected before the end of this year?
Well, you said coming in that this is a communications issue for the Fed. What does Jay Powell say if they want to do 50, or if they do 25? Half of the people on Wall Street are going to be upset they didn't do 50. The other half, if they do 50, is going to be upset they didn't do 25. So what does he say? How does he sell this to the markets?
Well, I think he has a great opportunity to set up a framework in terms of the monetary policy setting. He needs to acknowledge the fact that we're traveling towards some point, and that we'll get there either fast or slow. That communication will be essential because, as I said, if the Fed does less than what markets are anticipating, then there's a risk of essentially a repricing in markets the other way. A lot of people were asking me, what does a 25 basis point cut really do to the economy? Well, not much. It doesn't lower consumer rates much. It doesn't lower mortgage rates much. What happens if the Fed does not cut is much more dramatic because a lot of rate cuts have been priced in. So you'd see a significant increase in yields that would be much more dramatic and much more hurtful for the economy.
There's a lot of weight on this meeting because there is a real belief it sets the tone for the rest of the rate cutting cycle. I just wonder if we're overdoing that. How different things might look on November 7th, on December 18th, when we have more clarity on the outlook for policy down in Washington, D.C. Could they turn out to be the more pivotal, more important Fed meetings in 2024?
Perhaps, because we have a lot of uncertainty on the political front, as you well know. And one of the things that some have been arguing is that the Fed is just now catching up to the first stage of monetary policy. The second stage is what happens to the economy under different presidencies. Do we get an inflationary environment next year with more tariffs, reduced immigration, and more potential influence on the Fed? Do we get a scenario that's more likely to be a status quo type of environment where the economy continues to slow? That is highly uncertain. And so when the Fed does not know, it tends to go slow. That's the Brainerd principle, right? We're in this environment where there's a lot of uncertainty as to 2025. So let's focus for now, and policymakers should do that. Focus on the end of the year, focus on what you know, and adjust monetary policy to today's economic conditions and expected conditions over the next 3 months. And then in November, December, January, start to recalibrate policy as to what is expected on the policy front.
Clear thinking. Great stuff, as always. Greg, thank you, sir.
My pleasure.
Greg Deco of EY. Greg's view, essentially, we think they'll go 25, but they should go 50. The difference between what they will do and what they should do is 25 basis points. The difference between 25 and 50, for most of you, is going to come down to very, very fine economic data points. And it could be tomorrow morning, with retail sales just around the corner, tipping the scales between 25 or 50 on Wednesday afternoon. Equity futures going into the opening bound negative by 1/10% on the S&P 500. On the Nasdaq 100, we're down 0.5%, coming off the back of the biggest weekly gain on the S&P 500 so far, and on a 5-day winning streak on the S&P into Monday. In the bond market, we look like this. 2-year, 10-year, 30-year. On a 2-year yield, we're down by 3 basis points. On a 10-year, we're just about unchanged at 364. Unlocking a little bit of dollar weakness against the Japanese yen. Dollar yen breaking through 140 earlier on this morning for the first time this year. Briefly, back to about 140.36 on the session at the moment. With us around the table now, jumping into the studio, Megan Robson of BNP Paribas. Megan, good morning to you.
Good morning. Thanks for having me.
We were just talking about how this story might change from September into November. Yes. Into December and take on more of a political twist. And when I'm reading your research and your views on credit, this is heavy on politics, isn't it?
Exactly. So our view heading into the next 6 to 8 weeks is bearish on credit. We think investors are sort of underappreciating policy risk. And typically when you head into an election, you see volatility rise. And given you have a binary outcome with two very different implications, investors tend to de-risk their portfolios, reduce risk positions, and that causes credit spreads to widen. So heading into November, we do think credit spreads will widen.
Is that a story about positioning and pricing and not policy? Or does policy factor into this?
I think policy certainly factors in. I do think you have two very different candidates. If you take an issue like corporate taxes, for example, if you get a sweep in either direction, you could see net income up 7%. On the other side, you could see net income down 7%. So I think that uncertainty and inability to predict either outcome really drives the de-risking into the event. Following that, I think, depending on what outcome we get, we can see dispersion based on who wins in not only the presidency, but also in Congress.
Is your best case for the credit markets, though, to basically maintain what we have right now, which is gridlock in Washington?
Exactly. I think the best case for most investors is a divided government scenario where having a Democratic president, potentially divided Congress, means that we have status quo, not a lot of new policy. I think in a Trump scenario, a lot of folks generally assume that's going to be more pro-market, but in our view, there actually could be a lot of macro headwinds should we see new tariffs and potential trade war. And remember, a lot of that policy, you don't need a unified government to get. So that's irrespective of what happens with Congress.
So are you basically saying Trump is worse for the credit markets?
I think it's a little more nuanced than that. I think you do get a tailwind from potentially lower taxes. It would require a red sweep to get that. But there is definitely the risk of a headwind if we do see broad-based tariffs as he's proposed. He's proposed, as you know, 10% global tariffs, 60% on China. Whether he'll be able to get that extreme type of policy passed remains an open question. But in our base case, if he does do that, we would see a decent uptick in inflation. And then I think it's going to call into question, can the Fed actually resume this rate-cutting cycle, which is a headwind for credit?
Well, let's get to this rate-cutting cycle, 25 or 50. I want to spend some time on the 50. Two-part story. The first part is they go 50 and you're worried about them knowing something you don't know.
Yes.
The second part is they go in 50 and you're thinking they're getting ahead of the curve here. It's good news. Do we respond bullishly to this or bearishly if they go 50?
I think bullishly if they go 50. Credit is set up, in our view, for a 25 basis point cut. There is this assumption that potentially the Fed knows something we don't, but I do think they'll extrapolate, wow, the Fed's going to be aggressive. We're going to get growth that's held up okay with aggressive rate cuts. And I think credit initially would react very bullishly. We would see tighter spreads. Beyond the near term, of course, depending on whether we get a soft landing or a hard landing, that will ultimately drive where credit spreads grow. So we'll be data dependent. But initially, I think that would be bullish for markets.
Well, given your political outlook, does the market immediately, if the Fed does 50, price in 50 in November, 50 in December, and just an accelerated pace all the way along?
I think it's definitely possible that if we get the initial 50, there's going to be an extrapolation that we could see further aggressive policy, not only this year, but heading into next year. But we think that 25 is appropriate. We have a 75 basis points in our base case for 2024 this year, and then next year, 125 basis points. So I think that outcome is what is roughly priced into credit consensus. Anything more than that in the dot plot or in 50, I think will cause credit spread rally.
Do you wish we could just get this decision done today?
Yeah.
At 2 p.m. Eastern time? Just get it done on a Monday, Mike? Get it finished with?
Well,
you're all excited. I think
I'll go catch the plane right now.
The first live meeting in years for the Federal Reserve, but this one feels a bit tedious, doesn't it?
Well, it does in that sense, but what's going to be really interesting is to see what they put in their summary of economic projections is how do they see inflation and unemployment moving, since they pretty much got it wrong in the June SEP, and now where do they go for going into next year? And then how does that square with whatever monetary policy decision they make?
Yeah, putting together the December summary of economic projections might be challenging. Megan, thank you. It's good to hear from you. As always, thank you very much. Megan Robson there of BNP Paribas. Equity futures on the S&P, just a bit softer, down 0.1%. With an update on stories elsewhere, with your Bloomberg Brief, here's Danny Berger. Hey, Danny.
Hey, John. BMW took over 2 years to discover the extent of a braking system fault. A recall document seen by Bloomberg shows that customers and dealers began complaining about the faulty brakes in June of 2020. 2022. But it wasn't until October of last year that an in-depth review was launched. The fix is expected to cost the car maker over $1 billion. TikTok is taking its fight against a U.S. ban to the next level. The U.S. Court of Appeals for the D.C. Circuit will hear arguments against a new law signed by President Biden, which bans a social media app unless its Beijing parent company ByteDance sells it. ByteDance, TikTok, and a group of its users will argue to a 3-judge panel that the law violates the Constitution's First Amendment. And the history-making Polaris Dawn crew is back on Earth. The SpaceX capsule splashed down off the coast of Florida early Sunday morning after gliding to the ocean under 4 parachutes. The highlight of the mission was the first commercial spacewalk conducted by billionaire Jarek Isaacman and SpaceX engineer Sarah Gillis on Thursday. And that's your brief, John.
Danny, thank you. Thanks for this morning. Just phenomenal stuff at SpaceX. Congratulations to everyone over there and the whole of the team. Equity futures right now slightly negative on the S&P as we count you down to the opening bell. Up next on our programme, we'll set you up for the week ahead and catch up with Bloomberg's Ira Jersey about how this market is priced going into Wednesday.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something. There's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
.38 minutes away from the opening bell on a 5-day winning streak on the S&P 500, and equities pulling back 0.1%. Equity futures just a little bit softer. Bond market stable, 365 on 10s. And in the FX market, the dollar near the weakest level of the year to kick off a week, with euro dollar at 111 and dollar yen around 140. Let's get to the calendar. The trading diary for the week ahead looks like this. Tomorrow, retail sales and the Fed kicking off its 2-day meeting. Wednesday, a Federal Reserve decision followed by a news conference with Chairman Powell on Thursday. Another round of jobless claims plus a rate decision from the BOE. Then on Friday, it's the Bank of Japan's turn. The week is absolutely stacked. Joining us now is Ira Jersey of Bloomberg Intelligence. Ira, welcome to the programme, sir. Walk us through how we're priced, what we're looking for, 25 or 50, going into Wednesday.
Yeah, so the market's definitely leaning toward a 50 this week. And interestingly, and I think that this is something that's been missed by a lot of people who are kind of tourists in the rate market, but we're priced for almost 125 basis points by the end of the year. So that implies that if the Fed does go 50 this week, that they're going to go 50 again either in November or December. So if the Fed were to come out with dots that were suggesting that there's only going to be, say, 100 basis points, and Powell makes that very clear, then you can wind up seeing something like the 2-year note actually sell off a little bit, and the front end yields go a little bit higher just because of what we're pricing very aggressive Fed cuts for the rest of the year.
Ira, you mentioned the dots. Let's just pick up on that. Do you expect the summary of economic projections to validate market pricing?
I don't actually. I do suspect that the Fed wants to go more cautiously than what the market's currently pricing. So if the dots do show 100 basis points and Chair Powell is able to make a compelling argument to the market for that, I suspect that we'll actually not validate the pricing, and you could see January Fed funds futures sell off a little bit. Importantly for the longer end of the curve and for what the shape of the yield curve will ultimately do, the end of 2025 dots will probably be far more important to the price of the Bloomberg Treasury Index, because the market tends to focus on not what's coming up near term, but what the Fed thinks it's going to do, and therefore what the market expects the Fed is going to do over the next 15 to 18 months. So that 2025 dot will be very important, and especially if they move that lower as well from the current very modest cuts that are expected in 2025. If those extend, then you can wind up seeing even a more broad rally in the Treasury market.
Ira, when it comes to this debate of 25 or 50, do you think politics has any impact at all?
Probably not. I mean, in the back of their minds, I think it has to. Certainly, the policy implications of having one candidate or the other will be, has to be there. So, if you have more protectionist policies that potentially make goods prices go up in the U.S., that does have a policy implication. But overall, the Fed has to look at what does the incoming data show. Are we worried more about inflation or more worried about the jobs? And right now, they've made it very clear that jobs is their primary concern right now. And that's a major shift, obviously, from where we were a year and a half ago, where they didn't care at all about the job market. It was all about inflation and only inflation. So I suspect that that's something that's going to, that politics matters, but not that much.
Ira Jersey of Bloomberg Intelligence. Ira, thank you, sir. Particularly after that Jackson Hole address from Chairman Powell, it felt like this central bank was a single-issue central bank. But this time the issues changed. It was no longer about inflation. It was now just about the jobs market. Jobless claims come on Thursday. Tomorrow morning we get retail sales, the big one, sandwiched in between. The Federal Reserve just around the corner. Our lineup tomorrow: Greg Davis of Vanguard, Katie Kaminsky of Alpha Simplex, Blarina Urucci of T. Rowe Price, and Ashok Bhatia of Neuberger Berman. The good news is we're getting closer and closer to actually getting a decision and settling the debate. 25 or 50. From New York, this was Bloomberg Surveillance.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Markets start the week subdued. 30 minutes until the start of cash trading. I'm Matt Miller.
I'm Shonali Bassett. Katie Greifeld is off today, and Bloomberg Open Interest starts right now.
Morning, good afternoon.
All right, we're kind of chilled out right now, but there's
How
so much going on this week. Central bank decisions, traders divided on how big a rate cut the Fed will deliver on Wednesday. The S&P 500 has mostly bounced back from its summer sell-off, but the recovery isn't being led by big tech. Instead, it's everyone else's turn. And an apparent assassination attempt on Donald Trump foiled. We've got the latest on another shocking development in the chaotic 2024 race. And let's take a look at where markets are trading right now, because if you just look at the futures, you'll see not a lot of action here. S&P futures pretty much unchanged. NASDAQ futures down, and the 10-year yield holding steady at 364, 365. But we did have the yen with a 130 handle for the first time since 2023. So the dollar weakening against a strengthening yen ahead of the Fed decision to come on Wednesday.
Let's look under the hood here for a few movers, shall we? We can take a look at Apple, down about 2.5% pre-market. A new analyst report notes that based on this first weekend pre-order analysis, demand for the iPhone 16 Pro series is lower than expected. And of course, you have some weakness there in big tech. But Intel, on the other side here, up 2.5% pre-market. The chip maker officially qualified for as much as $3.5 billion in federal grants to make semiconductors for the Pentagon. According to people familiar with the matter, some good news finally for Intel.
Yeah, if they don't have any customers, we'll give them customers. It's a big week for central banks as investors prepare for the Fed to cut rates. The BOE and the BOJ also decide on policy. Take a look at this mega wall. We're expecting the Fed to cut either 25 or 50 basis points. Right now, the pricing is
so actually, this is
the majority of bets from traders are for 50 basis point cut, and Bill Dudley is out with a piece on the Bloomberg Terminal this morning arguing for it as well. The BOE and the BOJ on hold, but I think it's more likely we get a 25 basis point cut, considering that of all the major banks on Wall Street that you cover so closely, only one, JP Morgan, is arguing for 50 basis points.
It's fascinating. Bill Dudley, another prominent voice arguing for that 50 basis point rate cut as well. But what signal would that send to the market? Another thing we've been watching, that carry trade, it would be more stable if the Bank of Japan holds stable and we only get that 25 basis point rate cut. Let's see where the week brings us.
That's a good point. That's something that Dudley didn't mention, because he outlined the cases for both, and he didn't mention the carry trade. I think is really an interesting argument. Bloomberg spoke to Pimco CEO Manny Roman to discuss his thoughts on the upcoming Fed decision.
We're in the camp of 25, but I always say we have a crystal ball, and at the end of the day, we'll see what the market does. It may very well be that it doesn't make that much of a difference. There will be 3 cuts of 25, and at the end of the day, what matters is where we are at the end of the year. The total sum of the rate cuts may matter more.
What's the problem here?
how they do it.
Actually, if they are not
Joining
going
us
to
now
be
is
fast
Amanda
enough
Agati,
with the rate
CIO
cuts,
for Asset
and
Management
as the
Group,
labor
the
market
Asset Management Group at PNC. And Amanda,
cool down
I mean, what's your take?
Now,
It's essentially a
it's
toss-up right now.
starting to be
do we get
dicey
50 or
now
25?
because if it's going to be continued,
Well, it's always
then,
nice
as
to
you
be
know,
with you.
the
Thanks so
unemployment
much for
rate
having me. We're in that 25
go
basis
higher,
point
which
camp
means
as
that
well. We
the
really think
price
that
of things
going
better
50 basis
recession
points this week
signals
sends the wrong
given
signal
by
that
the labor
perhaps we're
market,
too
and
late
that's
to this party,
good.
or maybe the party's
So
ending
indeed, the
too
Fed needs to
abruptly. And
be
so we think
quite
25 is the right
thoughtful,
first step.
and
I think we're mostly in
I would
lockstep with the
say
consensus view that the ultimate destination is
how
what
to call
matters.
it,
It's not
like
one
wise
25 basis
enough
point rate cut or another. It's
go
the
for
sum total
for
of what
the
we expect to
right
see
bet, and
well
if
into
they think that
2025.
this is
It's interesting that our
50,
argument about
that
50
means
being
that,
too much for the
they
market,
think
really,
that
the
the
tough
labor
signal about
market
slowing
is getting
growth.
a little
But
bit
it's also hard,
trouble
Amanda, to
market,
think about
and
whether
they
they
want
cut
to
50
go
basis points and
or
there's an
be one
adverse
step
reaction.
before
We were
the
talking about some of the reasons there might be one, but
or
do you
ahead
really
of
think
the
that that's how it
recession.
would play out?
So hopefully
Well,
it's not
it's
going
sort
to
of
happen. I mean, the
interesting to
recession,
see
but
how
again, the
futures
Fed
markets are
needs to
moving. I always
really,
describe the
really
market as sort of a
time
kid in a
not like
candy store, craving a sugar
right?
high for more
So
policy
indeed,
accommodation.
traders,
So
this
the
is the
market
big
wants
question
what the
for the
market
week.
wants.
Also,
It
we
doesn't
got an
necessarily know
Empire
what's good
State
for it. And
manufacturing index
so I do
already
think there'll
out,
be a little bit of
and
noise
it
and
was better than
volatility if we
expected.
get
But as you
25
can
as the
see,
market's really
now
starting
I
to
think
move
this
towards
Fed
wanting 50. But I
decision
think
of
50
Wednesday is
signals that something
overshadowing
bigger and more
everything
fundamental may be
until
breaking
that
down in the
point, which
backdrop.
is
And the
going to
data
happen at
just
2
doesn't
p.m.
support
on
that, at least not what
Wednesday.
we're seeing.
Regarding the indices and the markets,
we're
have
already
seen
seeing
a really
stocks
big and
near
strong
record highs,
last week.
Amanda.
As you
The
can
economy
see,
growing at
despite the
2.5%, 3%, unemployment at 4.2%. Does it really look bad? I mean, aren't we on track for a soft landing?
Green days.
Yeah, it's
And
not
as
too
I
shabby,
mentioned,
is it?
it's
We're
very
still
close
very
to
much in the
all-time
soft
high.
landing
I
camp
hope
as
you had a
well. I
very
think when
nice
you look at the data up until the
Actually,
last few
we had a
months,
good one,
it's
right?
all
Financial
effectively
traders,
come in
a
a bit
nice
stronger and
traded
surprisingly
week we
so
had, and
than
hopefully this
expected.
one
And so
will
that's the
be
good
the
news.
same.
We
Marking
don't
this
see
for
the sky
short
falling. We don't
traders, it's
see,
not going to be
standing at the
boring.
edge of a
So
recessionary
today, as you
cliff
can
here.
see,
But there
market
are some
started
cracks
in
that
a
are
nice
starting to
gap
form, and
up,
certainly the
but
labor
it just
market
gave
is
back
showing
everything and
a few
even more,
signs of weakness.
and
So
now
we
the high is
absolutely think it's right
0.08,
for the Fed
but
to
the
start
triple Q is
cutting here and
much worse,
recalibrate,
and we
even
know
if for
for that
no other
Pimco
reason than
and
where
the
real
Apple.
yields have moved
And
to.
I'm
There's
just
some
going to talk
recalibration that
about
needs to
why.
happen here
Regarding
to
economic
reset
news, I'm
financial
just checking this
conditions.
again.
But we think if they
But as
start
far as
now
I
and kind of
remember,
keep
no
chipping
more
away at
economic
it,
news
that
for
elusive
today.
soft landing
Only
may be
the
engineered after all.
I also want to
Empire State
acknowledge
Manufacturing
the
Index
swarm
released at
of central
8:30,
bank decisions that we
which was
really
a bit
have this
better
week,
than
and recognize that
expected.
even though that
And
the Fed's
I'm
decision
just
here
checking it
is what U.S.
again.
investors are watching
Yes,
so very
CNY in
closely,
China, there
how
is
much
bank
volatility
holiday.
could there be
Tomorrow,
around the
though,
other
we will
rate
get the
decisions?
core
If you think about the carry
so,
trade and the linkages, for
and
example, there
even
have
an
been
FOMC
between
member, Logan,
Japan and the
speaks
United
at
States.
10 o'clock.
Do you think
After
that investors should be
indeed, and
expecting
then they
some strange
will
movements
tell
this
you
week?
be the FOMC
I think
statement,
so,
press
absolutely. I've
conference,
been
federal
saying
funds rate
hashtag
cut,
choppy
on.
is the word for the
Okay,
second
guys,
half
let's
here.
see
And
the
based on
news.
how things played out at the beginning of
Right,
August and the
gasoline
carry
price
trade
is
influence
sliding.
there
Here
in
is
terms
how
of the
the stock
market
market tends to
downdraft,
respond,
investors
said
should be paying
Jeffrey.
close
I have not
attention
read this
to what happens with the
article yet,
BOJ.
but
I
I
think
will
what's
for
also
sure.
sort of
And
interesting is
as
the
usual,
central
traders,
bank
if
moves
you
are a
have
little
any
bit out of
questions,
whack. That's
any
maybe a technical term for
trick
you
to show if
relative
you
to
want
history. We
from the
don't
last
usually
week,
see
more than
the Fed a
happy to
little bit
see that.
behind others in terms
Okay,
of
the
taking
Fed
the
is
step. They're
likely to cut
usually the
interest
leader.
rates until
So it's
next
important for
summer
the Fed
as
to
the
take
threat
action
of
this week. But I think the
inflation
BOJ
rates going
hopefully
up.
has learned learned a little bit of lesson from what happened the last time around, but we'll see. It'll be an interesting meeting to see how they handle things.
So what do you buy after, I mean, assuming we get a cut, Amanda, I imagine the market will be happy about that, or is it buy the rumor, sell the news in the case of a 25 basis point cut?
Yeah, it feels a little bit like a snoozer. That's my term for it. That the market has already kind of moved to anticipate some of these policy actions, and with valuation sitting at near price to perfection levels and the earnings growth backdrop starting to slow pretty materially, at least just for Q3 expectations. I don't know that there's a table pounding opportunity at the moment. We're still very focused on diversified exposures across equities in terms of capitalization and style, and really leaning into quality. I think it's still the name of the game here, despite what happens.
But what about, we have a story on the Bloomberg terminal about a rotation in terms of earnings. The 493 are catching up to the Mag 7. given, and it looks like that's what the market was doing as well. On the other hand, we're going to talk to Natalia a little bit later, is going to tell us that everyone's buying Mag 7 stocks now. Who benefits the most over the medium term if you get cuts coming from the Fed?
Hi, DVD. Good morning.
The bottom 493 for sure. But I think
guys,
this first rate cut doesn't mean all that much for small and mid. And that's been where a ton of pressure actually has been in terms of equity capitalization. And so a few more rate cuts under our belt here, and I think it actually makes a world of difference for small and mid. So I'm interested in quality as it relates to the large cap and the S&P 500 exposure there, but I'm a lot more interested in picking up some opportunities in small and mid. It just feels a little bit early to back up the truck there.
Speaking of backing up the truck, you have BlackRock warning on the bond market, saying that the rate cut bets are overdone. And we have to recognize that there's still so much uncertainty for what may come this week, let alone what may come for the next 6 to 12 months. Amanda, do you have any underlying concerns at this moment about the direction of inflation, particularly heading into and out of the election at this point?
I don't have any particular concerns at the moment. I think in general, it seems like we're starting to get that inflation battle a bit more under control. I don't know that we're particularly out of the woods yet. If you look at the services side of the equation, it's still running pretty hot. But on balance, it feels like we're getting to a more tame place. But that's why I think I'm a little hesitant to say, oh, we should go 50 right out of the gate here this week and another 50 on top of that, which is what the market is thinking. I think going too aggressively right out of the gate may catalyze a little bit of additional inflationary fire that we really don't want at this stage of the cycle.
Amanda, great having you on the program. Thanks very much for joining us. PNC's Amanda Agati talking to us to kick off the week, a week in which we'll get a Fed decision, the first rate cuts that we've had in years. Going to check on futures right now for that. We get over to, the boards here. S&P futures unchanged as you saw earlier. NASDAQ futures down 0.5%. And Russell 2000 futures, this rotation looks to be happening at least early on a Monday morning, gaining here. In terms of the stocks moving ahead of the opening bell, the individual names in the pre-market, let's get over to Abigail Jewell. Abby?
Well, we do have Apple down sharply here, down 2.5% after last week's big rally. That has to do with this cooling of risk sentiment that we're seeing today. In part, we're seeing it also for the shares of NVIDIA after a 16% gain last week. That stock now down in the pre-market as well, back below its 50-day moving average. So folks rethinking the buy the dip of the big tech names. Turning to the shares of Clorox, we are going to see that they are lower. This after a massive, Colgate-Palmolive, after a massive rally over the last year, more than 40% higher, having to do with big growth. Well, Wells Fargo today cutting these shares to underperform from equal weight. That's essentially a sell rating, saying that the epic run, the growth, well, it's priced in. Investors taking that seriously with the stock down 1.5%.
And your list, guys, please just let me know. I'm just going to start my list here. So on the long side, nothing yet, but to the short side, MU. However, I mentioned you Intel, INTC, which just rose 1.3% before the bell because Bloomberg reported late on Friday that Intel will qualify for as much as $3.5 billion in grants to make chips for the America's military. So this is a very good news for the Intel. And in my opinion, anyway, it's extremely extended. So I love to see that this is just coming higher now. So I'm just going to put it to my long list, INTC. Okay, the first one, by the way, in the big movers, it's Trump Media and Technology, DJT. It got a huge jump on Friday and seems like it continues. And the stock jumped by as much 25% in the previous session after the Republican nominee and majority owner Donald Trump said he's not selling his stake at the press conference at his California Golf Club Friday afternoon. And following his comments, trading was halted twice during that session due to volatility. So DJT is going to be on my secondary list, but let's just be careful with that stock, traders, because this can be a crazy mover, okay? But so far looks like, excuse me, a quite of a nice mover. UPSD, wow, big move to the downside, fell more than 4% after they announced a $300 million debt offering. The company said it will sell convertible notes due in 2029, and the money will go toward repurchasing some other bonds and for general corporate purposes among the uses. Actually, this is not the best news for the company. As you can see, it's just down to 8%, not even 4, with a very high volume and to this $34 area. The next support here can be the 3360s, where is the 50 EMA, but after that, not too much indeed. 31.70, the next one is 32, and even here is the 30 back to the 200 EMA. UPSD, it's under a very strong selling pressure at the moment and doesn't seem like it's going to stop, so be careful with that stock today. Bausch & Lomb, it's in the news because of a possible sale. BLCO, it's up a lot. This is still just rumors, which means we like the rumors, we like trading the rumors. Also, this is such a low mover. I would not say it hasn't got some big moving days, but as it is not a huge mover, Mike, I'm just going to put it to the secondary list. And here is the list of DVG already. Thank you. Okay, Micron, Intel, we were talking about. Alcoa is here, which is nicely up. The sale of, after its sale in stake in the Maiden Mining joint venture, AA, that's why it just went up. Okay, nice. I like AA to the upside. Also on 34.15, there can be a little problem as there is quite of a strong resistance, and this is not a huge mover. Let's see if it can go higher from here. ASE Technology, a semiconductor packager, did 1.7% as I see. 1.7% higher. Sorry. Okay, here we are. And the reason for that is a Morgan Stanley upgrade. Let's see this Technology. ASX. Okay, this is the one. Nice, 2.38. Volume, it's not the right one yet. It's just 15,000, and actually it's not that pricey stock. I'm just going to move it to the secondary list because of that. Colgate-Palmolive is here. CL, consumer packaged goods maker, shed 1.5 as Wells Fargo downgraded the stock to underweight from equal weight. It's a bit extended, so might we can just put it to our short list here. Hi, Julie. No mentoring room this morning. I am in the guidance room. You mean the guidance room? I am in the guidance room. That's weird. I am in the guidance room. Clifton, could you check it, please? Because I've seen you there. Sorry, Julie A is there, actually. Okay, maybe I'm mixing the name. Thank you, Clifton. That's weird. My microphone is on as well in the guidance room. Indeed. Okay, Clifton is going to check it. That's weird. You hear me? Okay, Roger hears me. He hears me. Okay, that's good. All right. So I am in. Okay, guys. So back to CL on my short list. Also, the volume is not the real one, the real deal, but let's just try it. Mark, thank you very much. Your watch list is always very much appreciated. Okay, Julie, maybe it's going to solve the problem. Thank you, Tara. Good. Thanks, guys. All right, so here comes CL and the next one, because we have a lot today, that's good. Ally and Synchron Financials, they stocks each lost 1% following BTAIG downgrade. Ouch. So SYF and ALLY, Life Financials, both of them are down. They can go to our short list. I like this one especially. Also, the pre-market volume is not that bad. and SYF for the other financial stock, which is down. A reason for that, as I told you, it's a downgrade. This is not a huge mover, but let's see how it can move today. I'm not very satisfied with this pre-market move. It doesn't look very good. Maybe I'm just going to stay with the ally here. Okay, Yelp is here, dropped 1.7%. Bank of America initiated a coverage of Yelp with an underperform rating out. So let's see if YELP can extend the loss. Might it can, but I'm not satisfied with the volume at all, so I'm not going to put it on my watch list. Here is SFM, Sprouts Farmers Market, which is up as on an upgrade. Okay, that sounds great. Sprouts Farmers Market, but again, pathetic low volume. Unfortunately, I'm going to put it to the secondary list. Might the volume can pick up, but if I'm just checking even the daily average volume traders, this is maybe not our type of stock. Yeah, I've seen Zillow in the big movers, and it's up after a very nice upgrade by the web push. So ZG or Zillow Z can just go to our long list. It's beautifully higher at the moment. So I can just put it to my long list as well. Okay, so INTC AA and ZG on my list. Anything else on your list? I see, yes, Exas I'm watching as well. Very good, Michael or Mark, sorry. I've just seen it on the among the big movers. Also, this can be a little problematic one, so I'm just going to put it on my secondary list indeed. And what else here on my list? Just a sec. Wow, lots of red and NVIDIA to the short side. I don't know if, yeah, DVG has it on the short side. And of course, Apple. I completely agree. After the bad news, what else here, which I see it's very weak? Coin. Guys, coin is quite weak because the Bitcoin it's fighting again with the 58,000 level. So might even coin is going to go lower. But as I see, DVG just called it. I'm not going to recall it twice. MU, it's on my list already. What else here? MO or MU, Mark? It's okay. MU and MO as well. Okay. ARM weak. Yes, Kevin. I think ARM is just down because of the impact of the MU nasty downgrade, or not even downgrade. It's rather, you can't call it as a downgrade when someone is calling a $100 stock back to 40. It's a price target, very nasty price target cut by the MU, and definitely it's just having a big impact on the whole industry as well. Hi, Gareth. Good morning to you. Okay, so actually, as I see, DVG still called Adobe as well, Meta, AMD, the whole triple Q, which is completely understandable. I think I'm just going to stay with these stocks. We know the things anyway. If the triple Q and the Apple and even the MU and the NVIDIA continues the red stripe, we should focus on the tech shorts for today, traders. Seems like the market is just a little bit spooked by this Wednesday Fed day, and definitely from the bad news on the Apple and the MU. So I'm just going to wish you a beautiful start of your day, a green one. And if you want to join me, I'm going to be in the guidance room. You're going to be in great hands of DVG, I'm sure.
Good morning, 44 Trading Nation. How's everybody doing? Hope everybody had a great weekend. We're ready to kick this week off with some volatility, it looks like. Last week, you talked a little bit about what we're looking at in both local U.S. markets as well as global markets. So it's important that we're keeping an eye on things like foreign exchange. U.S. dollar to Japanese yen is kind of one that I've been looking at, as well as kind of overall, like what do the rate cuts mean? So I know Scott's going to jump on here in just a moment, but look, for me, I'm keeping an eye on the tech sector. 225, obviously, we talked about on Apple last week. Unfortunately, just didn't have enough conviction to hang on to that short into this week. What a great move that would have been. I would have been waking up huge this morning, but that's okay. But keep an eye on tech, right? We should see some bounce here in the morning. I'm going to be basically looking for short positions across the market. Two levels to keep an eye on the Qs. 474 to 476. We've been talking about that level for literally a couple months now. So hopefully you mark your charts, keep an eye on that level. It should be, most highly traded zone. Should see some action in that area. So if we start to move higher, I'm going to be identifying areas where I could possibly short. So it's not counter trend per se, because we're still up on markets. What I'm trying to do is basically hedge. So I'm happy to take long positions where necessary, short positions to optimize kind of moving forward opportunity. So keep an eye on the SPY as well. We are only 4 points away from the all-time high on the SPY. That's what I'll be taking a look at this morning. I know Scott looks like he just joined, so I'll hand it off to Scott to kick things off.
Good morning and welcome to the 44 Trading Room. Sorry for my tardiness this morning. Just got caught up in work, getting prepared for the markets this morning. And as we turn into the week today, we've got a great week ahead of us. In fact, as DVG said in both Aggie, we've got Fed Week, Fed Speak, and a lot of stuff going on this morning. Volatility is here. That's a good thing. And as we get prepared for this week, just imagine the Fed meeting on Tuesday and Wednesday. We'll get the numbers on Wednesday afternoon. And should get a rate cut. My only fear is that it's built into this market and we're not going to see much of a pop. I think we get an initial pop, but until then, today should be a decent day, and then tomorrow will be a little bit slower day, and then Wednesday will be that wait and see day. Again, we're going to be waiting and seeing if, in fact, the markets can catch up to themselves and explode to the upside. So it's going to be a great day here. Let me just post a couple of trades here. Just have an abbreviated list this morning: long Oracle and then short on the Tesla trade. Let me put this down here: SHORT. Short equals Tesla and Apple this morning. Again, tech pullback this morning, and then the only other one here is the BX trade. I think same as what DVG had this morning. So, okay, that's going to be it. Good morning to all here. Good morning to everybody on social media. Great to have everybody here this morning. Seth, good to see you here this morning. Good morning to you. Yep, absolutely. Garrett, good morning. Jim, good morning to you. Miguel, good morning. David Orlando, good morning. Yes, Miguel. Yep. Ed, good morning. Morning, Scott V. Great to see you. They laid a turd, the Lions, this weekend. Not a good showing by any means. Just really, really disappointed in the way that they played and the coaching of the team this weekend. So not a good look for them. Not a good deal for the Lions. Now 1-1, but should be 2-2. I mean, should be there you go. Should be 2-0, but didn't play well enough. Watched the game yesterday. Did not like it. But anyway, here we are today. We've got our work cut out for us. Also, Trump in the news. DJ, what is it? DJT? Yeah, DJT. We'll put that up here as well. Take a look at this DJT trade. And again, big time move to the downside again. We'll wait and see if this stock moves at all. Apple in the news again this morning with the iPhone. And it's the analyst reporting that early shipping data may be softer for the iPhone 16. So we'll wait and see. We got strength downside in the tech sector. And we're going to be off to the races here in about 2 minutes. Yeah, I hope so, Jim. I hope you're right. I hope it is just a hiccup there. Counting on them to do well this year. Let's see. Position this for everybody. DVG will be taking the morning session with myself. Clifton is here. Aggie, good morning to everybody here in the room. and watching Oracle this morning moving up nicely here as we get this day cranked up and ready to roll here. Let's see that level that I love right around in, where is that Oracle trade? 44, so 50-ish. Okay, perfect. All right, I'm ready to go. Let's have a great day today, traders. Get this chart positioned properly here. Just trying to, yeah, since I'm in the move, since we're moving, I don't have all my monitors set up, so I'm going to get more of them set up probably by tomorrow or Wednesday. All right, here comes the open. Got about a minute and a half before we go. And again, watching Tesla to the downside. I'll be shorting that stock today. Oracle to the upside here. That 165 area, I really like Oracle. I'll post that trade. That's what I'm watching this morning. Oracle, will paint it green. Oops, there we go. ORCL 165. Remember last week we played Oracle. I got burned on it because it made a big move down after some great news. So we'll watch to see if that if anything happens with that today. Okay, all set to go. DVG is here. Already gone over his trades. Aggie's got hers posted. Yeah, we should be good. Yep. Okay.
I'm gonna be nice and patient this morning, Scott. How you doing?
Yep. I'm doing good so far. How about yourself?
Nice. Yeah, doing well. Doing well. I did, I want to keep an eye on Apple this morning. Talked a little bit about that last week, how after a closer review, I've never heard of a phone being shipped with technology you have to download. That's kind of interesting. I get why they're doing it though, right? Europe and China aren't allowing.
What's the news there?
Well, I think people are just starting to understand exactly what the deal is with the new phone.
Yeah.
So basically, as I read it last week, it's, Apple Intelligence is basically not loaded onto the phone. It's like a
I see. Okay.
download from the cloud kind of deal, and that could cause for concern. Actually, that's kind of I think what's unraveling, and hence why people are like, well, maybe they're not going to sell as well as we thought they would.
Right.
I'd like to see a bounce. I'd like to see a bounce to maybe that 219 where I start shorting. I could be, getting in early. I'm trying to put a short in now on Meta, actually, 521. I just got filled on it. And again, I'm keeping stops pretty tight, but if we start to see a downward leg, I don't mind holding on to these for a little bit longer. Keeping an eye on AMD, I like this pop to 152. I'd like to see that. If we breach 153, I may not even touch it, but just trying to find better entries on some of these short positions. Feels a little bit
down this morning
off the bottom of the Qs here. So I'm just keeping an eye on some of that.
What about to the upside today, DVG? Anything that you really like there? I see you have listed BX. That was one of the ones I was looking at before as well.
Yeah, I think
we're going to get a little downside
real
move.
Estate industry would probably be okay. Basically, when we talked about this over the last couple of weeks, is the higher the interest rate for real estate type companies, the cut it's better, right? So I'm thinking that might be a sector that benefits from rate cuts. I don't think chips are going to benefit that much. So we'll see. Again, like right now, I'm building a position on Meta. I'm happy to add to it if we start breaking like 519, 517. I may get into Apple a little bit early here. I like this break now under 216, but again, AMD looking pretty strong. So if it breaches at 153 again, it may break out. I don't know what's going on there because Nvidia is in the dumpster right now. So just kind of being patient this morning. Much as I'd love to go in heavy action, the downside, I'm just nervous that markets may
get it all working.
May pump the Qs or the SPY or something out of nowhere. So I'm just being patient today. And I have a feeling I may hold some of these. So like I said, if like Meta starts to break down, I'll add it, but I won't take a partial to a little bit deeper in the green. Apple, I might have missed. We might have left a point on the table. I'll probably start a short here on AMD just to see how we end up, but it just makes me a little nervous when we're at the bottom here if I'm going to get trapped. So anything, I may just, small position. Keeping an eye on the Qs here. It's really nice.
Well, I look at Oracle go, huh? Very strong for today.
Nice move in the Qs. Nvidia now breaking. I'm going to start a short here on Microsoft. 42870 downside. I'm going to put some puts on the Qs also right now. 470 strike. And they're kind of expensive. Dang it, they're moving so fast. I don't think I can grab them.
Yeah, Apple straight down. You got a lot of momentum this morning.
I'm going to go ahead and add to Meta. I want to see a break now under 418.
Yeah, JPM is up as well. No trades so far, waiting for Oracle to pull back, which it is. If it gets below 165, that is going to be my entry here on Oracle, ORCL.
Here comes the break on Meta. Let's see if we could get under 418. I'd like to see that and have it move quickly. There we go. I'll take a partial soon. Very soon, very soon.
Should I go 166 maybe? I'll announce it here. I'll put it 166 Oracle ORCL. This is all that we get for a pullback. I want to be long the stock. 2-point stop loss here to 164. Going
big trade for
long
me now
Oracle.
on Meta. Went ahead and took a partial. We still have some size. I'm happy to leave that as long as we stay below 418. Apple missed that trade. That's okay. Keep an eye on AMD. Let's see if we get a little bit of a push. Otherwise, 152 will be where I start.
13 cents to go here. Oracle entry 166.
Watch BA here. We did close.
Yeah, I'm long the stock right now.
On BA. We broke it now.
Long Oracle right now. Stop loss 164. Small share size I'm going to add here. 166.50 I will add. And then 167 if we get the top taken out.
Jeez. Apple. Apple is my #1 contender for short today. And it just left without me. Left the station. Coin now looking good. The downside.
Okay, I'm full share size now, Oracle. Target 167 on Oracle. 167 target Oracle.
Comes break on AMD. Again, didn't get the perfect fill size. And maybe this is the wrong move. Maybe it should be Nvidia because AMD is showing some strength here. But if we follow suit here in the sector, down we go. Microsoft
50 cents
will be immediately disobeying my short order here. So I don't like that. Again, most of these are going to be build positions to the downside, so I can hold on. But if we snap on the Qs higher, I'll be out. No need to fight the tape, but just trying to find better entries to the downside so I can hold them a bit longer. Like Meta, for example. Well, luckily, we took a partial once we saw that breach of 518. If we get more, great. If we don't, that's
come on, Oracle. Let's go. 167 target, Oracle.
APM about to break out. Microsoft holding up nicely. I may just get out of this position.
Here we go, DVG. 20 cents to go, Oracle, ORCL. 167.07. I'm out. 167.10. I am out. 3/4 of the trade, Oracle. Way to go. First trade of the day. Nice full share size trade. Selling into the strength of the move. Now watch the top here. Watch the very top of these two candles right up here. Should get the break. You can always add right at the top here. We get the break. I am going to add back to full share size at the break. Right here, that 167.50. Let's watch it.
I just got stopped out of Microsoft. 531.
166.50. I'll stop out. Still carrying that. Watch the 167.50. We'll add here. Back to full share size.
Look at AMD now. Come on.
Once I take it off here, 166.50 break to the downside. I'll come out of all. Hang in there. Here comes Tesla. Is it going to be one of those comeback days? I don't know.
Yeah, I think the only way is SPY has to lead the charge.
Yep.
I think some panic will set in, some de-risking will set in. Then again, this markets haven't exactly been rational the last couple days.
Watch the ad right here. Watch the ad on the breakout at the top.
I'm watching Google now for a short, actually. 157.60. Google. Let it come to me. Microsoft just, what happened there? Cranking now. Okay. That short didn't work. Okay, keeping an eye on Apple now. Looks like it's trying to get heavy here. We could see a real strong push to the downside in a moment.
Those of you that aren't used to the pattern on Oracle this morning, watch the pattern at the top here. This is a topside breakout, one of my favorite patterns to trade. Again, we've hit our head twice at the top. You can see the orange dotted line. That's where I'm going to go. I'll add to the existing trade on the breakout here. Don't be afraid that it's overextended because this breakout could be very impactful here. So just watch it. Watch your opportunity to add. Here we go. See if we get it 167.50.
Look at AMD now. Look at AMD go. Bye-bye.
There we go. Buying into the strength of the move. Looking for about 50 cents to the upside now. We'll sell at the 168 level. 168 level. Come on. Don't give up. 168. 168. 168. Come on. Should have this easy here. Here we go. 16 cents to go. 20 cents to go now.
Here comes my move on Meta.
25
as long
cents.
as it stays
168
below
target.
518, guys, I can hang on to the rest of this for maybe the remainder of the day, hoping that we pull back a bit today. Unfortunately, I think it might make sense coming into rate cuts. Like, what does a quarter point mean? What does half a point mean? You know, and again, I think the benefactors will be rate sensitive companies, so real estate primarily.
You're going to have a banking play in there too.
Yeah, definitely. Definitely.
You're being patient with the Oracle trade here.
Looking for the
168 target. Here we go. Go, baby, go. Go, baby, go. Come on. $168 target. There's two trades now in Oracle. First trade was a really nice winner. Second trade was add to the first trade here and target 168. Should be able to get this now. Come on. Here we go. There we go. 7 cents away. 7 cents. Come on. 168. I'll be out. As soon as we cross over it also. 8 cents to go. 9 cents to go. Come on. 168. Watch the ask. Over 168. Boom. There we go. Huge trade now for me. 168.25. I am out 3/4 of the trade on Oracle. Got you again. Boom. 2 in a row just playing that Oracle. Again, waited for the pullback there, got in, added at the top side breakout. And as you can see, traders, those of you that are trying to learn, again, what I did is I talked about, that being my favorite trade on the upside breakout here, taking more off here, 168.54. I'm out. Okay, just 100 shares left now on Oracle. Okay, so that top side breakout there, a lot of people will get a little scared because of the fact that we've already extended ourselves. The stock is very much extended. There's no real pullback other than the one that we got, because we know what we're doing. And that upside breakout, when it hits its head up there twice to 3 times, and then it breaks out, that surge is very strong. And that's what you saw this morning here on Oracle. Super, super trade. All right, DVG, let's go. Let's go.
I like it. I'm keeping an eye on Costco now. Seeing how it behaves. Up here, its all-time high, which is 923.83. Tag 922 today. Let's see if there's maybe more room to the upside. We'll see.
Does Tesla make a comeback? Well, I'm going to certainly try here. 226 Tesla small share size here to go along TSLA, or it's a setup for the short side. A little pop and drop here. We're going to find out. 226 entry Tesla small share size here. I'll build on the position if, in fact, this market wants to turn around. Get us over the VWAP.
Qs are getting a little bit stronger here. See what happens. I'd hate to get stopped out of my meta position because we had a nice winner there this morning.
Grab this.
But I'm trying to hold on to it and see if we get some continuation. Just if we don't get it. My remaining shares now are literally at break even. I'll give it a little bit of room to dance, not a ton though.
We'll add at 227. 227. Those of you that are in the Tesla trade, we're over the VWAP right now.
The conditioning in the market has been buy the dip, buy the dip, buy the dip. So people buy the dip. Yep. I'm not surprised. I'm looking for a rug pull personally, not because doom and gloom. It's more so just because I think there's other aspects that we're not really addressing right now. Weakness of the dollar, conflict areas. I mean, there's a lot of stuff I think that kind of being looked over right now. And when does that unraveling happen? I don't know. Maybe it just continues to be ignored. By the way, BA, new 12-month low right now. Just poor company.
Still in the Tesla trade. I'll be right back.
I think that company's going to be next up for activist trading, without a doubt. All right, let's see what we could do here on Microsoft. Watch Apple here. And Apple continues to display some weakness here. We should see a big move to the downside. Like a push to the 212s. I know that 212 and 210 on Apple though, there's a big buy zone down there. Let's see what happens.
Okay, traders, I'm going to take the last 100 shares off of Oracle, ORCL. What a huge trade. Those of you that came into this trade with me, congratulations on the Oracle trade. a great trade here. Now all we need is Tesla. I've had 2 trades in Oracle, 1 trade in Tesla. Tesla target's going to be that 227.5. Got to get this thing to go. Kev, what about SMCI? I'm going to put it up here. Take a look at it. I know DVG was trading a bunch of that, what, a week ago.
Qs are trying to get strong here, firming up. Let's see what happens.
Yep. Come on, 227 Tesla.
Uh-oh, Apple's moving up now.
Off the bottom. Tesla almost got there, that 227. I like SMCI to 442, Kevin. 442. Like I said though before, is this a bull trap? I mean, is it something that we're going to have a little spike and then a rollover? Or do we get some volume? And that's the way to tell, by the volume. And if you get the volume coming in, then we could have a recovery day today, believe it or not, on a Monday, which is hard to believe. But can happen, has happened, will happen. Maybe not today, but welcome everybody on YouTube this morning. Thank you for joining us. You want to come into the room here, be part of our community, you can do so. Clifton's got the link there.
Video looks kind of weak.
So we had a nice rise up here. We'll see what happens. Not convinced that it's going to be a bad red day right now. See where we go. Yeah, the problem with weeks like this is you've got all of this pent up anticipation of the Fed rate cut, and we know, I would put a bunch of dough that it's going to be a quarter point because of the administration that we have. It's just going to be one of those. We're not going to ruffle the feathers. We're not going to do something out of round. It's going to be a quarter point. Is that good for the market? Absolutely, it's great for the market. But is that going to be met with, okay, let's sell off now? I don't know. But that's what's great about being a trader.
I dumped my runners here on Meta in a moment. Good news is we got paid on Meta. Now the runners are turned slightly red. Watch the SPY here. SPY is literally about to break out any moment. JPM Could be a long.
Come on. Tesla doesn't know what it wants to do. SMCI, nice trade here. Take it off this 444. Got you know what though? When you mess with SMCI, you've got to lengthen that that stop loss and the target on the stock because it's a big, huge moving stock. Not for the faint of heart, for sure.
It's just interesting looking around, like where money's going. Costco trying to break out, just pulling down, flipping off the bottom. Microsoft trying to now edge higher as well. Apple starting to inch higher. Q's pushing higher. SPY is breaking out. I mean, no question about that. But then you see names
I
like
heard
NVIDIA
this morning,
that
DVG, that the SPY is within like 4 points of an all-time high.
yeah, it's 565.16. It's all-time high.
So we're getting close.
Yeah. Names like NVIDIA are pulling back. Apple trying to get up to 216 now. If it does, it may try 219, which I'll dump my short position and try to get in at 219. Trying to find like a way to anchor of some of these highs if possible, but naturally there's risk associated to that. Showing some resilience here. 563. It's above that. Maybe it starts.
Still waiting on Tesla here.
NVIDIA just woke up. Might actually add to Apple short.
Are you long Apple right now, or are you short?
No, short. Short. I have 0 long positions on right now. I'm building a short position in Microsoft.
It's our Tesla trade.
432 Microsoft.
227, a little over 227. We're out on the Tesla trade. Going to take a point here. Just watching, about 10 cents to go. We just spiked up over there, just not quick enough to take it. Here we go. Come on, come on.
All right, Meta breaks 520 again. I'll hold on to that into the close. And then I need Apple to break the low of the day.
And here comes Oracle back down. I'm not afraid to take it again. We'll see if it how it acts here right at the VWAP line.
If Microsoft breaks the close, I will add to my short position there. Coincides with the 200. It's kind of stressful on days like today, though. Not trying to say that I'm calling the top, but I'm definitely trying to build positions at the tops here to see if we pull back, great, then I can hold on a bit longer. But I mean, as soon as it moves against, it gets it gets expensive pretty quick. Here comes Apple. 212, 210, my target on Apple. Meta, like I said, I'd love to see 508, but we may not get that today.
Here's the only thing I'm in right now is the Tesla trade long. Come out of Oracle. That SMCI, look at that. Beautiful, beautiful move, Kev. Really nice. Congratulations if you took it. Really nice move.
No, I want to see green. Good news is we managed to bank just under 2 today, but now, and slowly giving back some money here, which I don't like. But even Ion Coin, I really thought that was going to tank, but looks like it's getting some love this morning. I'm watching that 162 level now on Coin.
Okay, this is our time right now for this Tesla trade. Let's go. Again, 227 target.
And watching Microsoft under the close, I will add if it happens. But Microsoft's pretty darn strong today. Same with AMD. If the SPY breaks down, guys, watch out.
There we go. Come on. We are at that 227 mark. I'm going to take it off right here, 227.02, and I am out of the trade now on Tesla. A real nice trade here, full dollar. Thank you, full point to the upside off that 226 entry here. Just wicked up there. I was quick enough this time to come out of it. That filled right at 227. I was trying to get 227.02, didn't fill there. All right, we are 3 for 3 this morning. I like the way that works out on a Monday, especially. Now we're looking for our fourth trade. SMCI, awesome move. Awesome move. Still under the close from Friday, but moves plenty and in the right direction if you're long.
AMD pushing well. NVIDIA as well. Watching Microsoft slowly pull back here. Meta doing the same. Apple doing the same. Hopefully we get a bigger drawdown on Microsoft. I'd like to see, I don't know, I'd like to have like a 8 or 9K day today. Maybe this week. Don't really have a ton of news today. 11:30, we do have the 6 and 3 month bill auction. It's kind of about it here in the U.S. Nvidia proving to be resilient, AMD as well. Just trying to hold up markets, prop us up a bit, but
I'm going to hold a couple hundred shares here on Tesla just to see if we get this continued break to the upside here to fill the gap. SMCI looks like it's going to fill the gap.
very tempted to start nibbling on Costco. All names. See what the 920 does again. Get up there, that'd be great. Scott, I'll be right back. I'm going to grab some tea.
We'll be here, yep. Kev, I agree with you. I agree. I don't see us doing much of anything until the Fed speaks. Yeah, I mean, all I have is just a little bit of Tesla right now. What else are we looking at? Anything else out there that catches your eye right now? I mean, probably worth a comment on the overall market this morning as well. And if you're sitting here looking and find out where we're at, I mean, Dow's up like 267 points, S&P up 5, and the Nasdaq's down 85. So not a bad day all around. You got Apple with the drag on the tech sector. We'll see what happens here.
See if I can finally get the breakdown in Meta and Microsoft.
Anything under 226, I'll come out of the rest of the Tesla just even. Like Netflix long. Let me take a look at Netflix here. Can't get that SMCI out of my mind. NFLX. Yeah, I do too. It just hasn't been a great mover, and the volume's real low. But I like it over Friday's close. Sure do. Look at Apple again. SMCI. We're on the right stocks. Just now a pullback would be nice to go long.
Apple waking up now.
I mean, don't call SMCI too far out of it here. I mean, it could take that 457.50 out for the breakout of yesterday's or Friday's close, which would be a great entry here. I'm going to watch it close here on SMCI. Traders, I will be right back. Just give me one moment, please.
adding a little more to Costco here. May get out of Apple and see if I can just re-enter at 219. Get a better entry there. Again, these are going to be more of like a swing short for some of these trades, so don't mind eating a little bit of red on some of these for a while. Costco worked out pretty nice. Market's aiming higher now. Big move on Costco now. Okay. May actually trim up on that position. And days like this are kind of challenging for, I think it's going to be like this the next couple months. Up and down, left and right, up and down, left and right. That's great news as traders though, guys, right? You know, me personally, at one point, you know, could have banked a ton of money, been done for the day. Right now, what I'm trying to do is build some of these short positions for a longer term hold. In the spirit of trying to add swing trades a little more to my arsenal. Who knows? That could definitely play against me today, but just trying to be a little bit more patient overall on my kind of hypothesis of markets. I do think the Qs could push lower today. Worth noting that 474 level, if we get above into like 475, maybe even close the gap, a big chance that we continue to push higher. But hoping to see a little bit of a drawdown in some of these tech names, frankly, just because I don't know if they're going to be the benefactors of rate cuts. You know, maybe the chip sector, maybe. At Costco now. Let's go. I put a partial down at 912, and then I'll let the rest do whatever it wants to do. I might build an AMD short position now at 15360. 153. Actually, let's do 15370 if I can get it. AMD 15370. Again, it's a build position, so if it moves against me, it moves against me. All right. Come on, Q's. Time to break down. So right now, earlier today we banked just about 2K. Given, they're unrealized right now, but give back maybe about $400 or $500, $600. We see markets move against. I'll make sure I walk away with a green day, but I don't mind holding this. Like even if I wash out my gain for the day, I kind of want to see this play out. Now, obviously, if we move aggressively to the upside, then I won't have a choice. But looking for this type of pullback, I want to see really some follow through on the Qs and see it break 470 pretty violently. And if so, then I can literally walk away and let my gains grow for a little bit, which would be, I don't say a first, but it's just, normally if we saw what happened on the SMCI trade the other day, right? Made 15, 16 points and left, I don't know, 30 on the table just for not being able to hold it overnight. So I'm trying to get better at some of that stuff, frankly, just to make me a more profitable trader. I don't mind coming out every day and grabbing points where I can, especially in markets like this. But I'm trying to grow as well, guys. Always trying to learn, always trying to.
I think Jarrett's got a good comment there. Yeah, Jarrett's got a good comment about frustrating market lately. The big moves happen overnight, then sell off or move, chop around. We've had our fair share, DVG, of choppy markets. That's for sure. And it just goes. I think it just goes to show you that when DVG and I started to talk about this and put it together, we really were focused on these morning sessions because of the fact that this is where the volume is. This is where the market really kind of moves and grooves in the morning session. And this is where we want to focus our attention. And that's why we have this set up to really only do the morning sessions with, sometimes we come back in the afternoon. My apologies on Friday too. I'm just so everybody knows, and I think everybody knows this. I'm right in the middle of moving home and office to a brand new area. So I've got boxes and laptops, and you guys should see this place. It's really unbelievable. So just bear with me here. We're going to get that sorted out in about 2 weeks, and then set up the new office. And then if you've ever moved before, you'll know what I'm talking about. So everything's in disarray, and thank God I've got DVG and a good staff here with Aggie and the rest of the team and Amir. But just hang in there. Again, we're growing, we're getting better, and I appreciate everybody hanging in there with us. But I've got a nice green day so far. Perfect score right now with just a couple of shares of Tesla left, a couple hundred shares of Tesla left. And we'll see what happens here. See if we make this full recovery. And
this is also neat too. I was short today and managed to bank some money. You were long today and you banked some money. So kind of interesting that things like that can happen. So it goes to show as well too, like sometimes people like short markets, like to go long markets, and I think that's kind of what makes this community unique. Is we have plenty of traders that some like to short markets, some like to go long markets. Today I'm like uber bear. So I'm just trying to pick my spots at key levels. I like Microsoft at 433 and 432. Now I want to see it break the close and stay below the 200, which happens to be right at that close. AMD, I liked it at 153. We got up to 154, right? So I'm just trying to build some of these positions to hold them long term, to let them start printing money. And it's a little bit different than my normal style where I'm like, hey, let me grab my point, let me grab my 2 points, let me grab my point and a half, 3 points, whatever it is. I'm looking for a big break. Like I want to see Microsoft down at 426. I want to see AMD down at like 149. I want to see Apple down to like 212. And it may not happen today. And I'm kind of looking for those levels to get tested. If it happens today, guys, hallelujah. If it doesn't, that's okay too. So anyway, on that note, I'm going to step away for just a moment. I'll be right back to get my tea off the
Morning, Tim. See you. I was a little late this morning too, Tim, so I understand. Yeah, I see that choppiness on Tesla. We're just sitting here doing zero. Seth, we'll see you in the morning. You take care. SMCI pulling back. This is the one that I really would like. We'll see what happens here. Yeah, the S&P can't get out of its own way right now. Okay, I'm going to add to, or I'm going to get into the SMCI trade right now. Okay, so I'll post it over here. This is going to be an SMCI long trade. SMCI long this morning over the, let's see, 440, 450, 450. Yep, 450. Long SMCI. Okay, stop loss is going to be 3 points. Just get it up here and we'll check it out together, see what the spread is like. I have not looked at the spread. Yeah, fairly spready, but I'm going to take small share size here, 450. Okay. Give us something to watch here.
All right, look at that. Come back from some tea and we're green. We're printing up big green numbers now. I like it. Microsoft, let's see. If I can get under the 430 handle, I don't like the A, we're right at the close, and B, we're right at 200. So I do want to see some follow through, see if we can actually get a breakdown. If we see a spike, great. I'll take a partial. SPY is breaking the low of day. Qs are on their way. Meta, we talked about it, stays under 520. I'll hang on. Barely hanging on to Meta. I mean, at one point it got almost a 523 mental. It was like a block, and then I noticed that 200 was right overhead. So good news. Making some dough now. Don't mind trimming up positions. The only one that's really kind of hurting me a little bit is Apple. I may end up having to just dump that and then try it at a repurpose up at 519 if we get up there. We'll see. Silly Apple. What are you doing?
All right. Okay, watch SMCI again. Entry is going to be 450.
Come on, Meta. Free fall with no parachute. One time. DVG, please. Asking nicely. Look at AMD now. Let's go. Trying to be as patient as I possibly can on Apple because it's eating away some of my profit. Thank goodness, though, AMD giving me some money, Microsoft giving me some money, Meta giving me some money, and Costco. Guys, we got our partial at 912. How about it? So I'll let the rest go on Costco. Wasn't a huge position, but I'll take it. You know? Somehow Apple's holding up while the Qs, Coin, Nvidia, JPM, I mean, everything's like retreating. And somehow Apple's trying to push higher. Is that retail or is that institutional money coming in there? I don't know. Really unbelievable, though, on Costco. Surprised that I even was able to get that. Happy, but all right, guys, keep an eye on the Qs now. SPY's getting heavier. 560, well, there it is. I was just going to say at 560.66, we break that. SPY should break down a bit more. Here goes the move I've been waiting for all freaking morning. Beautiful, beautiful move. Love it.
Tesla, big time move down. No trade on SMCI. May get into this at a lower price underneath the VWAP line, so we'll see.
I'm going to take a small partial on Microsoft here and leave some there. We can print some real money today. We're up to 3,200, 3,600 bucks. Now I just need Apple to completely collapse. If that happens, guys, I can just, you know, sit back and enjoy this tea. Let's hope that's the case. Did Meta just put in a new low of day? It did. I missed it. Missed that little spike lower. Darn it. Uh-oh. APM is retreating now. Okay. The other thing too is part of the reason I was looking at Meta this morning is to say there was a rumor. I don't know if it was actual news yet, but they're getting into issues with Europe governments because we're using data in Europe like they weren't supposed to, using AI and stuff. So immediately for me, I'm like, well, that can't be good news. Anytime you have there's two big no-nos in my world. One is you don't mess up your financials. We saw what happened with SMCI when they said, oh yeah, maybe there's some cookbooks in this equation, right? Like we saw what happened to stock. And then the flip side was the very next day they said, hey, we're going to postpone our annual report 10K, which makes it even more kind of suspicious, right? Financials is number one. The second one is don't get in trouble with big governments. That just equals lots and lots of money. Okay, JPM holding up. Interesting. Interesting. I hate to do some de-risking here, but I might have to on Meta.
Okay, watch the entry here on SMCI. Again, 450. I'm going to be long this stock.
Uh-oh. Is that the bottom of the day just then? Pretty strong bounce. Sorry, I'm looking at Meta specifically. It hit 517.40 and now it's at 520.25. So 3 points in 2 candles. All right, guys, I need for the room to root on Apple to completely toilet today. We've got a big position on it now. Love to see the low of day get taken out.
Okay, watching the SMCI here for entry. 450 entry flat out. Those of you that are coming into the trade here, we've got about 25 cents to go for the SMCI entry here, 450. Coming up on it right now. Get it right at 450 at the break here, the whole number. Okay, I'm long the stock right now at 450. Again, target's going to be 454, so 4 points to the upside. Going to look for 4 points here to the upside, 454. Shouldn't be a problem with this stock as it moves a bunch. Jim, you take care of yourself. We'll see you tomorrow morning. Enjoy the rest of the day.
Come on, Apple. Break that VWAP.
See where Apple's at here. I'll put it where the Tesla trade was. A VWAP right in front of it, staring it down.
Only concern I have right now is, bulls can easily just buy up a bunch of shares and push us higher and run me over. But it's trying to be a little more patient, as we mentioned earlier today. So hanging in there. Instinct over emotion today. Pretty low volume day today, which is also a concern. I'm going to tighten up my risk on Meta. Get over 521.50, I will be out. So I'll be giving back 50 cents on the running or remaining shares, which is not much. I don't mind taking that little bit of a haircut. You know, give back, what would that be? 82 bucks.
Come on, SMCI, don't stall here. Got your Apple looking real good right now.
Yeah, just hoping it actually breaks down. I mean, it could easily come back up, push above VWAP. It's right at that level. So if there's interested buyers there, we'll probably find them right now. Obviously hoping for more sellers to come in and break that low a day. If so, we will be printing big time. Okay, here we go. I'm going to take a little bit off of Meta, just a tiny bit. I'm going to leave some to run. Guys, we are printing now, up nearly 4 on the day. I'll wait to see if we break Apple under 215. I'll trim up there as well. We did take some partials on Microsoft on the way down, so happy about that. Kind of no risk now, right? I mean, that's kind of where I wanted to be today. See if we can get some of this to print us some more money on the day. That would be phenomenal. Phenomenal. Come on, Apple. 10 more cents. Let's go. Wonderful, wonderful day.
Yep, there you go. Nice breakdown. Good job. Very nice. Yep. All that I'm taking words out of DVG's mouth, but when I look at that chart, all that I see is anything underneath that VWAP is golden on Apple.
Yeah, I didn't like that it was hesitating at 215. I took some off there. Same with Meta, same with Microsoft. So we've got pretty low risk into the day. We banked over, 3. So that's not bad. I'll let the rest run, excuse me, for the rest of the day. Unless we get stopped out. Like I said, Meta for me would be 521.50. Microsoft's going to be literally right at around entry, so 432. And then Apple, I'll probably let that go to 217.04 on the remaining shares there. Not disappointed. I mean, we wanted an 8K day. Involved me hanging on to too much risk, so don't mind paying myself. I think I'm being pretty generous with some of these stops, but I don't know, maybe I need to be more generous for swing trades here. I just don't want it to move against, right? Like even Apple bouncing 60 cents off that bottom there in a little less than a candle. I mean, that's, I don't know, really could easily get run over. So don't want to have that happen. Come on, Q's. Guys, we're up almost 10 points on Costco. I get it. That was a really small position, but now I'm like not even worried. I'll literally leave those runners to my entry. I'm not sure if anybody took Costco.
Yeah, why not, right?
Yeah, I mean, these are the kind of things like I'm trying to get better at. Scott, you know, I've been talking about it like for swing trades, and you know, when you're up 10 points on a stock, obviously something like Costco, that's 1%, but 10 points is a pretty big delta to make up. Can it do it? Of course it can. We've seen these markets push extremely high, extremely quickly, but you know, if Costco can grow another 20 points and, you know, I only have 10 shares left, like, great. So, you know, more money. But trying to ease my way into it because typically I won't hold half full size positions, heck, even quarter size positions for that matter, typically on swings, unless it's like, say, for example, you know, I think we'll see a rotation into energy names. I think we'll see rotation into dividend names kind of as we get closer, seeing that gold's pushing all-time highs. You see all the miners are doing well. Just for me, looking more at what are these big institutions doing? Where are they putting their money to work? Or where are they putting it to store? You know, that's kind of where I'm thinking is some of these energy names, they start grinding higher slowly. You know, they're after one thing, yield. You know, they're not looking at points, they're looking at percentages. So yeah, Vincent, I hope so. Hope so. You know, Microsoft getting real close to the bottom of the day, which, to be fair, it's still a $430 stock. 425, 424 seems within reason today. Another 1% to the downside. There's a lot of investors in there that just may not want to sell their position. So we'll see. AMD is just surprisingly strong today, right? Literally broke the low of day today down at 150.96, 151 more or less. Bounced right off of that. I mean, You'd think there'd be some follow through there. You know, the low pre-market is 150.46, so clearly there's some interested parties, even that 150 handle on AMD. Nvidia got to 114, found buyers, not surprising, 115 key level. But the bigger low on Nvidia is 112, and then 110, and then 108, and then 105, and then 100.
I like SMCI hanging in here, just going sideways. I'll deal with that. I can handle that. Down about 50 cents on the trade. I mean, up about 50 cents on the trade. See where we go. Chipotle, Mark. I don't know. Let's take a look at it together here. Yeah, it looks great. Right here at 57, maybe 57.30. Not a huge mover right here. SMCI is treading water.
So on the SPY, I have 560.66 as a intermediary or intermediate type range zone. 561.76 was a previous high, followed by 563.67, which was the next high printed. Now keep in mind, when I talk about these previous highs, that was at a close or at a peak during an intraday session. I keep track of those just to see how stocks behave, and then I try to find these in between levels because, for example, I have the SPY at 560.66, and the next level below that, it was a previous high, is 553.72. It's a pretty big move, but if you see what happened when we got to that level, what day was that? Thursday. We held that level and we literally went all the way up to this 561 handle. So it's important to kind of watch some of these levels to see how they behave because you're going to find buyers, sellers in these zones. Doesn't always mean you'll see rejection or moves higher, but it is kind of a way to identify, you know, where are people lining up? Where are they stacking up in the queue to buy or sell specific stocks or indices? So hopefully you guys are doing some of that research behind the scenes for yourself, but these are just levels that I have. Obviously, cue the disclaimer. Where's Rick? Is he here today? No. It's not financial advice. It's your money. Risk it at your own accord. Here's a nice little breakdown here on Meta continuing lower, like it. Apple, let's see if we finally break 215. SMCI is surprisingly strong today, Scott. Where was your entry? Did you enter the VWAP? 445-ish?
Yeah, 450. No, I'm in it at 450, a little higher here. Yep.
Very tempted to add a few more shares to Costco. In fact, I will, not much, just another 5 shares. I'll move my cost basis down, up. I won't look at it, but don't mind. Not a huge position. Definitely holding on longer than I typically do. Let's see if it pays off though. So right now we've got small position in Costco, short, Meta, short, Microsoft, short, Apple, short, AMD, short. We got paid already. We paid ourselves first, rule number 1. Now we've got the running shares left. Let's see how they perform. We just broke 215 on Apple. Let's see if we get a little more commitment there below 215. If not, I may trim up that position as well, just a tiny bit. Amir would be proud. He would say, let it grow, let it grow. So
yeah, let it grow, let it grow.
There goes Apple. Let's see if we can, 213.92 low a day. I don't know if we're going to get that, but if we do, it should be quick. Start holding up this 215 though. Q's aiming lower, SPY's aiming lower. I'll probably take a partial on Apple anywhere mid 214.
So 4-point stop loss on the SMCI trade. Again, I have a small share size, so it's not going to hurt, but want to get this done.
Well, look at Costco. How about it? I'm going to get out of my Meta position. I don't know if we're going to bounce here. Trimmed up a tiny bit on Apple. Still have some there. I'm going to just leave some on Microsoft, frankly, so I can be done for the day, and then just let these positions autopilot. That's kind of what I'm thinking. And I thought we'd get a little bit more of a push lower on Meta. We didn't. Microsoft really trying to hold that 430 level, which I think really if we break that 428, 425 should be within reason. And then Apple just broke 215 for split second, turning around here. Man, I wish, you know what, Scott, in a perfect world, I wish I had infinite depth and I could have hit Costco for like 1,000 shares. Wouldn't that have been nice?
Yep, very true. Would have been great. Could have gone shopping at Costco, bought yourself just about anything there today.
Couple carts, couple pallets.
Yeah.
You know, new
TVs.
TVs.
Couple pallets, that's the key. Yeah, that's the key. 100-inch TV for every room in your house.
BA 155. I mean, guys, this thing is in deep trouble, man. Like, I don't know. What's interesting is every time it dips at these levels, like previously it was like 159 and change or something like that was its like 12-month low. We found some, you know, bottom feeders there that pushed it back up to 164 almost. And then literally the very next day, more bad news. And the next day after that, more bad news. So I don't know. I really think BA is going to be the next activist play, in my opinion. Who knows, though? I mean, does BA get down to sub 100 at that point? I don't know. Here's your move on SMCI. Very nice.
Yep, let's go. $454, I'll be coming out. Good way to end the morning here at the 454. Let's go. 50 cents to go.
Coin breaking out now, guys. 162. Be on the lookout. I think can rip. I talked about that too for the last couple of months. Is I think that as we see, gold hit all-time highs. We see the miners absolutely crushing it in the last, several sessions. For me, Bitcoin was always like a risk-on asset, right? Meaning, if institutions are feeling bullish on markets, then you see a big push or spike in Bitcoin. That said, I think what's happening is, while on the one hand you could argue it's already become part of a different asset class, I do think that now it's going to become a formal asset class, not just because they created ETFs, et cetera. I think there's a really big concern right now. I know I'm concerned about it, about the debasement of the US dollar, which I don't want to be, doom and gloom and go down that path in this session today. But I'll tell you one thing, it is concerning. BRICS becoming a little more powerful now, which is not good for the US dollar, the Japanese yen versus US dollar, which would, if you guys remember the carry trade where we saw a huge dip in markets not too long ago, we're at the same level right now. For the longest time, the USD JPY, for those of you guys who have Forex, you take a look at it, overlay that to the Qs and the SPY. For the longest time, it was very, pretty strong correlation. And then, of course, when we saw what happened with the carry trade, Super, super strong correlation there. Well, now we're at the same exact level. The difference is, for some reason, SPY on Friday moved higher, Qs moved higher, and that USD JPY moved lower. So for me, I'm kind of like, okay, there's a little bit of an anomaly, right? Is this maybe a pump and dump thing? Is this a, equity risk premium thing for the big companies? I'm not looking at retail traders from that perspective. It's really more so what institutions are doing. And we're also seeing a higher level of, put to call ratio coming in to this week. So again, I think there's some optimism, obviously, around rate cuts. My real question is going to be how it's perceived. If we actually do get a 0.5% rate cut, is that perceived as negative for markets? It was, it's funny. I was looking at it going, hey, that could be bad news. That could be the Fed basically admitting, hey, we screwed up. And literally, like, I don't know, within the following 2 weeks after I was talking about that, you hear all these pundits on CNBC and wherever else, Bloomberg, kind of saying the similar narrative, but yet markets took off. So just kind of interesting to see behaviorally what's going on. I don't know if this is just price action. We'll call it greed to optimize portfolios, because at the end of the day, let's remember, institutions have a job to do, and that job is to basically bring home the bacon, I'll say. And it's hard to do that when markets are going down, when markets predominantly are designed to go higher. So at what point do we see a liquidity event similar to what we saw during that quote unquote carry trade? I don't know. But I'm imagining the SPY puts in a new all-time high before that happens. Given that we're like,
okay, traders, I'm going to call it a day right now at 11:15. I'm going to get this SMCI at the 454, which I will come out. We're about ready to go there right now. The ask is at 453.93. Just came back down. I'm going to watch this here. 454. I'm going to come out. It's been one of those days. 4 for 4 this morning. A perfect start to the week on a Monday. I'll see everybody. Thank you. I'll see everybody tomorrow morning. DVG will clean things up here. Be done at 11:30 today. Go do what you need to do and get prepared for tomorrow. Let's enjoy the money made today, and we'll hit it back again tomorrow. DVG, good to trade with you this morning. Happy for your success, especially on the downside of this market. Really took advantage of it nicely. It just goes to show you, again, we don't, DVG and I do not talk in the morning prior to the market as far as what we're going to post, what we're going to trade. And you get the independent look at the markets from both sides, long and short. Just so happened today it worked out on both sides. So congratulations, traders. I'll see everybody tomorrow. Thank you so much on social media for supporting us. Smash the thumbs up button. I'll see you in the morning. Take care, DVG. Take care, bud.
Thanks, Scott. Yeah, so for our community here, again, I have a feeling markets are going to be very similar to this for the next couple months. Going into the election, I anticipate probably some sideways action. We talked about pushing higher, then the leg lower, pushing higher, then the leg lower. I still think that's in the cards. I think the difference, though, now is because the SPY is so close to its all-time high, I would anticipate some exuberance, we'll call it. By the way, glad we got out of Meta and higher. But I think for me, it would make sense to push the all-time high because there is a little bit of overhead supply there, create that exuberance, and then you see some proper selling in the SPY. Worth noting, the Qs have still a long way to go to its all-time high. Does that become the new barometer? Meaning the Qs have to get to 503.52 or higher in the next several months? to kind of fulfill some of that overhead supply in the queues. I don't know. I mean, that's, what is that, 4%? 5%? Yeah, about 5% higher, maybe a little more. So yeah, let's call it 6%. So the queues would have to move higher 6%, which think about where NVIDIA would be at that price. You know, probably up near the 140s. Tesla, Microsoft, right? Like they basically would have to be putting or posting all-time highs. When you look around, I don't really think Apple should be putting all-time highs in, especially after their event. But I've been wrong before. Trade what you see, not what you feel. But for me, it's going to be a little bit more about keeping an eye on price action, doing a lot more research on, you know, what the institutions, they call it dumb money, smart money indices or index. Obviously, smart money, institution, dumb money, retail traders. That's kind of how it's been broken down, though, unfortunately. Love or hate the name, it is what it is. But we're keeping a very, very close eye on those things as we move into rate cuts, which, again, Wednesday, big day. Big day. We'll have better line of sight to a quarter point, half a point. I think a quarter point is all but baked in. But that's where my question mark is like, okay, if we get a 0.5% rate cut, does that mean we move higher or does it mean we move lower? That's kind of maybe we could do a poll on that. We'll do that on Wednesday or maybe Tuesday. So think about that maybe as we get ready to ask that question tomorrow. Basically be multiple choice, 0.25% higher, 0.5% higher, 0.25% lower, or 0.5% lower. My whole thing is I think when they actually start asking questions, they're, let's just say, not as aggressive on the rate cuts that institutions are kind of hoping for. You know, like, hey, we want to see at least a 1% rate cut by the end of the year. Well, we're only going to get 3/4, or we're only going to get half. I mean, I think that's when we're really going to see some fireworks. A little more concerning too. Full-time jobs going down. Part-time jobs going up. So what does that tell you about the consumer? I'm going to work multiple jobs just to get by. Not a good thing for economies. Hence why I was kind of looking to short Costco today. Amazon, similar. I think the three big retail names you're going to have to keep an eye on: Amazon, Walmart, Costco. Which is kind of weird. Think about it, because Amazon, a majority of their revenue comes from their data center, or AWS. In fact, I would argue they don't even really make a whole lot of money on the consumer side of things, but man, are they efficient. So if they get better at squeezing margins, frankly, the way Walmart does, it's kind of interesting if you guys care to dive into Walmart. They're more of a logistics company than anything. They understand every zip code, every store, every buying pattern, every behavior. So if you're curious about retailers and how they work, and versus CPG or consumer price packaged goods, retailers use what's called category management, basically to optimize whatever it is, household goods, snacks. Think of how you would classify an aisle, basically. And Walmart is the best in the business. They use data all over to make sure, like, at what, eye level, where do you put the discounts? Where do you, I mean, they've optimized that. So therefore, the reason why, if you guys go to a Walmart, it's cheaper, they squeeze the suppliers because they make up in volume what they don't in margin, because they know Walmart will sell through everything that they order, right? So, which is incredibly different than, say, for example, Amazon. Amazon, they stock everything, right? They put a lot of that inventory cost, though, on the sellers. So if you heard, YouTubers talking about fulfilled by Amazon or FBA, right? That's all it is. So basically, you turn around and go, hey, I'm going to buy 1,000, I don't know, iPhone covers, I don't know, whatever it is, and you send it to Amazon, and they store it in their warehouse so that it gets on the trucks. So for them, that cost is marginal other than storage costs, right? But they have huge, obviously, distribution centers. But I would argue they're a lot more efficient when it comes to overall transportation. I think the challenge is they don't have the same, vertically integrated category management that something like a Walmart has, because they're bound by brick and mortar. So versus Amazon, they still got to pay the cost of shipping, even if it's their planes, their trucks. So I think that eats into their margins long term. But anyway, I will be quiet for the time being, get off my soapbox, as I call it. But hopefully this is some of the stuff you guys are thinking about. It's one thing to just look at charts, but it's also another thing to understand the companies that you're trading from a macro point of view and from a technical analysis point of view. Mark, taking a look on Tesla. Let's take a look at Tesla real quick. Yeah, looks nice. Building a little bit of resistance barrier up at that 229. I think if it gets above that, you should see a push. Qs are getting a little stronger. SPY's getting a little stronger. Probably going to get run over on my running shares on Microsoft, which I don't really care. We banked a ton of money on that one today. Same with Apple. That could potentially round out my day. Yeah, exactly, Mark. I was keeping an eye on coin. 162 I thought was a long shot. Originally was looking to short coin this morning. And after I saw the strong pop this morning, we had two nice hammers form on the 5-minute. So we saw kind of a doji right before the open. We saw a big hammer form after that drop to 155. Try to retest, put in another hammer, and then it just took off. So realistically, once I saw those two hammers, I said, I'm not touching it. Again, it's on a 5-minute chart. You want to see what I'm talking about on coin. Costco, meanwhile, guys, it's at 907. Our initial entry around 920. Partial was 912. And then we got back in 911.24. Added to that position. Again, if I had infinite depth, that would be amazing. Because that'd be a massive on that trade, but that's okay. I might get stopped out, guys, on the remaining shares here. It might be time to go long. I like this 229 level for Tesla. The only issue why I won't take it is I'm basically counting on the breakout. If anything, I'm going to probably go long on the SPY here. And I'll get out of my short positions. But I'd like the SPY to potentially try the highs. So let me find out what a 562 tomorrow. $1.70. Now they're down at $1.67. I'll wait. but I'm going to keep an eye on. I'm going to go long anything right now. It's going to be the SPY or the Qs over a specific stock, only because I'd like to have, a little more breadth involved in a long position right now. Whereas if you get into Tesla at 229, I mean, you run the risk of pulling back to 226, so you're risking 3 points to make question mark. You know what I mean? On the upside. Let it grow, right on, Tim. Yeah, so in instances like this too, especially on a day like today where we banked a ton of money, I'd rather use options on a SPY or Q, right? Whether that's puts or call options, maybe even do a spread, just to mitigate exposure, right? So for, let's just call it now, they're down to like 158 for a 562 strike on the SPY, let's say, for example. Now they're down to $1.50. So let's just say about 10 at $1.50, right? That's a $1,500 risk, assuming it goes to zero, right? Like that's a lot. That would be 3 shares of the SPY versus 10 contracts. So there's ways to use, options as not only a hedge, but frankly as like a leverage, which is typically how they're used. But don't know if any of you guys use options at all. But it's a good way to kind of mitigate any downside risk, especially on a day like today where we had a nice, beautiful green day. If markets decide to move higher, awesome, you can collect on it. The opposite is also true, right? If you think that we're going to hit this 200, which is where we're at now on the 5-minute SPY, we reject and move lower, well, maybe grab some puts. I'd be keeping an eye on the financials. JPM right now, holding that 205 level for now. But look more broadly, look at that whole industry. Pull up XLF, right? VIX is moving a little bit higher, not too aggressive, right? We always talk about, 15 to 16 is kind of, would say, healthy markets. Anything above that, you start getting into higher volatility. But look even at the XLF. We had a nice pop this morning to potentially break out, and then we just saw immediate rejection. So when I see that, and I'm looking at XLK, which is tech was like limping higher, trying to get higher. And it's literally stuck right at the 200 EMA right now. So I'm not really getting the warm and fuzzies that we're going to for sure move higher. I want to see those two sectors, really push higher. And if you really want to see an ugly chart, pull up XLE. Right, we saw some bullish behavior this morning that pushed it really high and then just completely gave it all back. Oops. And I think we talked about BX down when it was like what, 130 bucks? No, maybe 135 bucks. Yeah, right. And then like, let's call it mid 130s. We talked about it, guys. It's at 153 right now. Reason being, no matter how big the rate cut, the bigger the rate cut, the better for this company. They own one of the biggest portfolios, along with BlackRock, with BLK. I mean, they own a bunch of stuff. They own half the world, actually, BlackRock. But you know, no matter if it's a quarter point, 0.5%, 2%, whatever. The bigger the number, the better for these companies, because they have an opportunity to refinance all their outstanding commercial real estate debt. And trust me, there's a lot. So, typically you'll see interest-only type loans. So, a myriad of different smattering of different types of financial vehicles used for those commercial properties. But, if you have an interest-only deal that maybe you did in, I don't know, call it 19 or 20, where rates were 0, and it's coming due, usually 3, 5, 7. It's kind of the typical parameters for interest only, and then you roll them, right? It's basically CFO's job to kind of manage the burn rate, capital exposure, et cetera, on some of these debt tools. And if you figure 5 years is kind of the magic one, that's probably the most common. 5 and 7. 3 is usually for short term. Maybe you're just floating a note for 3 years if you need to. But if they negotiated 5 or 7 year deals in 2019, guess what? That's this year. This year is when your loan is due 5 years later, right? You typically want to start that process ideally a year prior, so that you can allocate all your high interest components and then refinance that debt. So again, just kind of being mindful of that when you look at a company like BX or BLK, and they own, BX got $1 trillion, guys, of assets under management. Almost 100% of that is in big commercial real estate. I don't mean strip malls. Maybe there's some of that, but I'm talking like the big, skyscrapers and stuff like that. So you can look at names like Bechtel as well. Bechtel's one, but they're in DAX, and then you have I don't think Shorenstein is. I don't think Shorenstein is public trade. All right, guys, it's decision time on these markets. Did you get who's in Tesla, by the way? Mark, did you take Tesla? Tim? Tim, look, we're printing $1 trillion every night. I honestly, Tim, I think it's more than that. And you figure just our interest payments on our current debt is higher than that. Mark, you took Tesla, cool. Good luck, man. I really hope that thing rips 530 plus for you. 535.77 is kind of that key overhead breakout, like monster breakout, where you get over that. Let's just call it 236, right, for round numbers. You get over that 236, then it's 245, 250. Just don't know. Tesla would totally benefit from a 0.5% cut. Because they could in turn help finance their vehicles for less. Meanwhile, of course, we all know Elon's like the king of cost cutting and having a completely vertically integrated business. I don't know if you guys have ever seen his facility in Austin. I had a chance to check it out. I used to live down in Texas, pretty close to it. First of all, it's massive, like unbelievably huge. And it's the little things. So like where they built, there was an old train track that was nearby. So what did they do? They extended the train track literally right at the end of their production line. So when they're making the Model 3s and they come out of the production line, they literally can drive right onto the back of a train and then just get shipped to wherever they need to go. Like, brilliant. Freaking brilliant. Not to mention the batteries and all the automation he has in that facility. It's just unbelievable. You can find things on YouTube to see just how vertically integrated he's created that gigafactory in Austin, the headquarters. It's pretty impressive, truly. I mean, not only the sheer size of it, but just everything they're doing in that building is phenomenal. So it's hard to bet against Elon. I love the guy. I think we need more billionaires like him, frankly, in my opinion. As far as just like being able to focus on important things, 20 years ago, no one gave a hoot about electric cars, and now, I mean, I can't go anywhere without seeing 15 Teslas like in 5 minutes or more. Tim, yeah, a little late to Tesla. Yeah, it's cool. It's all good. So here's what I'm worried about right now. Typical volume on the Qs in the last 30 days per day, right? So daily volume is 38.3 million shares. On the SPY, it's 52 million shares. So on the SPY today, we've traded 12.6 million shares. And the Qs, we've traded 11.12 million shares. So when I see that, I'm worried about who's waiting, who's lurking. Is it the bulls or the bears? Because like even Microsoft only traded 5.3 million shares today. Averages in the last 30 days per day is 18.5 million. So not a guarantee that 13 million shares show up to Microsoft today, but it is an average. So not surprising we see a little less volume today as we come into Wednesday. So my whole thing is if we don't see a ton of volume today, we'll probably see it tomorrow, or everyone's waiting just for Wednesday. And if you're a bull, wouldn't you prefer to buy things cheaper? So just get out of the way. Let the bears push markets lower, create some demand and some supply that you can buy into. You know what I mean? That's mentally how I'm thinking about it. Like, do you want to push markets up on Monday, or do you want to wait till Tuesday so you figure out, everyone shows their hand on Monday, and then you get to make your decision. Do you want to continue to sell off, or do you want to buy more? I mean, you want to buy low and sell high, right? Clearly an oversimplification, but it's food for thought. I hate to short NVIDIA, but this 116.40 level looks kind of nice. Keep an eye on it. I may build a position there, but we'll see. Hey, Mark, what was your entry on Tesla, by the way? Okay. Got a point right now. I think coin has a real shot at exploding. Maybe not today, but I think just, the spirit of having additional asset classes. I've been talking about that for months. I think Bitcoin's going to be a little bit more added to more portfolios than it is today. It's pretty wild to think when it's, $59,000 of Bitcoin, but there's other ways to get involved now. Tesla, look at Tesla. What's your target, Mark? Trying to get your breakout over 230, I imagine. Quick question. Anybody look at the heat map today? As I say that, how many of you guys are actually just pulling it up right now for the first time? I'd say if you want to be bullish in the next couple months, not just day trading, but swing trading, I'd be looking to high dividend yield names and buy those dips. Like, I hope I'm wrong, but I think tech's in for a reckoning, personally. More so to take, I don't know, 5 to 8%, I think, off of the big names, and then find some stability down, 5 to 8% lower on those names. More so because of seasonality, 1. 2, I think there's going to be some window dressing, regardless of which administration wins in the coming election. No, I'm not. I'm not taking NVIDIA here, Jared, or sorry, Mark. I'm just watching it. I like that level though, at 116.40. You could argue maybe get a better entry up at 117.90, so just below 118. So I'm keeping an eye there. Like maybe I could get a better entry, but it'd be more for a, let's just say like grab 100 shares and I just hang on to that for like a couple days. But and the reason is if you pull up a 5-minute and you put your 200 EMA, it's literally right at 117.91 right now. Is where the 200 EMA is. And if you look around, Apple has had trouble with 200 all day. Like on the 1 minute, just pull up the 1 minute. Microsoft, same thing. I mean, it stayed above the 200 most of the day. Now it's stuck under the 200, can't move. BA, forget it. I mean, that thing is just, on its way to the toilet. Coin is above the 200, so which is why I'd be somewhat bullish. Tesla, kind of the same thing. Maybe a bounce off of the 200 would be a good. It's 228.20-ish. And again, it doesn't have to hit those levels like right exactly, right? It could move an extra 10 cents, 20 cents, 30 cents. I don't know. But it's a place to watch for entries if you're long, short, whatever you want to do. And what I'm finding in these markets, on the one hand, you could hit it for, max leverage right out the gate, but building into positions is not necessarily a bad thing. If you maybe start with okay, here's my plan, and let's just say you're willing to go in for 200 shares, as an example, right? Maybe you come in for 150, and then you add 50 if it moves in favor, and then you take your partial, and then you let the rest dance, right? It's kind of what I've been doing today with my share sizes. Is like, hey, if I see it move in favor, I'll add. But I'm also going to be a little quicker to take my partial, but now I'm trying to let them run, right? Even like Apple, it's getting ready to get stopped out there, right? 217. I'm just letting it grow. And it's hard for me to do that. I'm just letting you guys know right now. It's hard for me to do that. It's not really, my style is kind of, frankly, to stay profitable, I've become incredibly efficient at scalping, like big scalps too. Costco, we're up 15 points almost, 13 points, 14 points. So like coming in for a point or two here and there, and if you're hitting it for 500 shares to 1,000 shares or even 2,000 shares, depending on whatever position is, I mean it's pretty quick to make some money. What I'm trying to do now though is, even if it's 100 shares or 200 shares, and just letting it kind of churn and work for me. I haven't been great at that, to be honest. SMCI was, I think, okay, I've had enough. It's time for me to actually start trying to do this more, because we nailed it, right? I think many of you were here that day. 415 long was the post. We got out around 431, 432. It's at 450 today. Could have left that alone for a little longer and make some money. But I don't really like to hold stuff overnight, just in general, unless it's my portfolio. But portfolios, set it and forget it, Doesn't hurt that I own a lot of the big names really cheap in my portfolio, like NVIDIA, for example. Heck, even Apple. Let's see, sorry, let me read up on some of the stuff. Take a look at RBLX weekly. Okay. RBLX. Ooh, what's going on here? Roboblogs, huh? You know who loved this stock? Yogi. Yogi loved this stock. Yeah, actually, that looks kind of interesting. 47.65 is the level to beat. If you get over 47.65, I mean that thing can scoot. Interesting. Yeah, good post. I wouldn't take it. It's not really my style, but I can totally see it. If you get over that 47.65, if anything, maybe you can look at your level 2. I don't know, but it might be too far out for pricing now. But if you can see that far out and maybe see just how much, in fact, let me see if I can put up something here. Okay, let me get rid of that for a second. Thanks. Okay. Yeah, so it looks like there's a big sell wall up at 47. It's like 47.20 to about 47.40 on Roblox. So if it can get above 47.40 and then you break out over 47.65, yeah, I mean that thing can rip. You'd probably have to hold it on for more than a day though. So, yeah, exactly. Might take a lot of patience. Yep, exactly. Oh, did I miss NVIDIA? The one thing that's interesting about NVIDIA, you pull it up on a 15-minute. Are we putting in a cup and handle? Question mark. I mean, that's a pretty round bowl right there. So I don't know. You see a 120 print on NVIDIA again. I mean, look out, 130. Only reason I'm even considering short, like the AMD position and all that, like look at SOX, SOXX. That's your semi. Look at SMH, another semi ETF. I mean, I'm not feeling the warm and fuzzies there. Can it turn around? Sure. Do I think AI is here to stay? Sure. I just don't know if these evaluations are going to hold up. You know, I think NVIDIA arguably is kind of the one that, you know, you could argue based on their revenue and their projections, technically buying it now is cheaper than when you know, could have bought it almost any other time because they've grown into their revenue. That said, there's, you know, rumors that maybe there's something amiss with some of the financial reporting, the same way SMCI might have had an issue. I don't know. So like that, it only takes a black swan event like that out of nowhere to just wipe out your position. So again, I don't like betting against NVIDIA. I don't like betting against Tesla. You know, those are companies I think are well-run companies. JPM, same kind of thing. But it's kind of like being at a poker table. You're not there to make friends. You're here to take their money, right? So that's kind of how I look at it. Is if we're here to win. We're here to make money. You got to take all your emotions and set them aside. All right, guys, I'm going to trim up my Costco position. It's just too good to, you know. I'm going to trim it up. I'll leave very, very small size on Costco. More so just for me to, like, you know, mentally have some validation on some of these swing trades. See if we can get a win there. You know, if it bounces and I get stopped out, oh well, who cares? We banked a ton of money on that, considering share size. You know, so I'm not disappointed there. We still have Microsoft going. We have Apple going. That's kind of it. I trimmed up on my AMD position. So again, we've got really small size now, Costco. We've got some on Microsoft. We've got some on Apple. We've got a really small position on AMD. All to the downside, trying to hold them. And I put my stops in places where, you know, I'm going to give back a little bit of dough if Apple goes to 217 or if Microsoft gets up to 233 again. Or sorry, 433. That is okay with me. How's everybody else doing today, guys? Did we even ask? What the heck? Let's do, how was your morning session? I'll make it anonymous. Let's see. How'd everybody do today? I'm very green on the day. Okay. Don't be shy, guys. Red, green, doesn't matter. Just good to know, like, how we're all doing, and then if anything, maybe a couple afternoon sessions. Maybe what we'll do is get some volunteers to share a trade that you did really well, and then maybe a trade that you didn't do so well. So maybe we could find opportunities to kind of walk through. I'd say our community logic. You know, we all have. There's some good traders here, great traders here. There's some new traders here, and that's okay. Like, we can all learn from each other. And I think that's the best part about being part of a community, guys. Like, if you day trade alone, your learning curve is going to be a lot flatter than if you trade with a community. And I say that because you'll learn from other traders that either trade similar to you, maybe have the same risk profile, maybe same account size. I don't know, whatever. Maybe you guys get to know each other, whatever. But these styles can help you look at markets differently and help benefit your overall trading strategy. So again, smaller groups. I can't say 80% of our overall group, but based on what we have here, it looks like 80% of us green today, 20% red. Appreciate you guys sharing that. It's not to point fingers and ridicule. It's quite frankly the opposite. How do we make sure? Trust me, I have red days too. How do we safeguard some of that? Right? How do we take that 20%, turn it into 10% or 5%? All right, guys. If you wanted to be long NVIDIA, it's the same level, 116.40 to go long. Qs are firming up. SPY's firming up. I'm actually going to take the SPY here, 561.40. Okay. I'm going to take a small position long, and I'm going to do it with options. I need to see 561.40 again. It did pop to 42, but I want to see it. I want to see a reprint of 561.40, and there'll be a market order on those call options. If I don't see it, I'm not going to take it. And the reason is, pull up your 200 EMA on the SPY, 5-minute chart. Okay. I also have my 55 SMA. And what you'll notice is we barely cleared over the 200, and then we tagged the 55 almost on the dot and rejected immediately. So if we get above that, I want to take advantage of the full move higher. And oh, by the way, that coincides with the VWAP. So you have this convergence, confluence, if you will, at all these levels, right at the VWAP. So we can get a strong push higher. We'll get some commitment from the bulls. If we continue to stay here below, I won't take the trade. I'm not going to force it. I'm not going to rush. Mark's looking at Meta. I'll pull up Meta. I actually took Meta earlier today to the downside. It was a nice trade. Yeah, but Meta's showing some incredible strength today. I like that. I like that position there, Mark. I'm not sure what your build size would be, or share size would be, but you know, I'd put your stop maybe not too far under. Let's call it a point almost. 521.30, I'd say. Yeah. All right, guys, keep an eye on the SPY here. I think I may get it here. We'll grab what, 10 contracts? Sure. Let's see if I can build. Let's see. All right, I'm going to try to buy these 562 calls at $1.60. Okay. There we go. I'm in. And if it goes to $1.50, so it's $100 I'm going to risk right now on these call options for SPY. I'm literally putting in a stop right now. Actually, I'll do $1.49, so $110 I'm going to risk on the SPY. If it moves lower, we'll get stopped out almost instantly. Not going to risk a ton on this one. Oracle wants to take out Friday's close. Let's see. Wow. What a monster move on Oracle, which is so weird. You know, I mean, yeah, they had their open world. It's something to do with it. They probably made some great announcements there, but they also announced that they've got like $100 billion in debt in AI chips through NVIDIA. So I don't know, question mark there, right? But hard to bet against Larry. He's, you know, love him or hate him, he's the guy, you know, built an empire. You know, bulletproof relational database, and then just acquired companies left, right, and center to build what is Oracle today. I mean, they were the original experts of integration. I mean, they would buy a company that, you know, may or may not have anything to do with what they were doing, or they were trying to expand into it, and then magically, boom, the technology integrated to all their stuff, like in 6 months, which is like crazy. from a time frame perspective. Companies try to do that, and they just end up, they'll buy a company, and then they'll run independent for 4 years. And the only thing they'll share is their financials with each other. They can't even integrate their, one acquisition. This, Oracle would acquire 10, 15 companies a year, integrate all of them. It's pretty wild. So. Who wants to count down the launch on the SPY here? 5, 4, 3, 2, 1, go. And if not, I'm going to give back $110. Give back a bottle of scotch, basically. Let's see. Come on. Well, listen, guys, I'm going to set these on autopilot. Okay, we've got our stop in on the SPY. If we move higher, great. We benefit from the SPY. If not, we get stopped out. We still have Apple short. We've got Microsoft short. And we've got Costco short, right? I'm not going to get rich off the Costco short at this point. It's a small size. But you guys know the routine. Appreciate each and every one of you. Really do. Thank you for being here. Thank you for being part of the community. I will be around at the open tomorrow, but I've got some errands to run. I got to get cars serviced and all that other fun stuff. So if I don't chat with you guys until tomorrow, I will see you at the open. Cheers. God bless.